you know, yada this, yada that, within those things that are happening, if you have live positions on, if you have a short dated position on, or be a long duration position on, either way you look at it, you're kind of up against, having to deal with whatever the climate of the market is in that moment, right? So a lot of it is, again, stemming from, trying to be ahead of, all the, the variables, right? We like to speak to that ideal of, what are the variables in the market? What are the things that's causing the market to act, a certain way, right? Be it erratic, be it normal if it's working for you. Of course, if you directionally biased and the market's working in your favor, then most times you're not going to really complain. Like, who complains when they're making money, right? That's the ultimate conversation, or the ultimate scenario where people will know that there's a lot of things that may be happening that may not be organic, yet you're still making money, right? People don't walk away from that if that, spigot is still open and the money's still pouring in. Again, macro breeds that kind of sentiment in a way where, of course, we understand if you're running the business, as long as you're legal, or whatever, not, getting over on customers, that's to be debated in terms of price value and, inflation and all this stuff like that. Of course, that's why we study this stuff too, because we don't want to be taken advantage of when it comes to being, a consumer. So the great thing about that, of course, you get literally a front row seat in learning how these businesses operate, how they work, how they source their materials, how they manufacture it, how they skew it, and send it on the shelves or whatever. You kind of get a chance to see it from start to finish. So you can now be a little more practical in terms of how you spend your money, as opposed to just, okay, I'm just going to buy this because it's on the shelf, and I'm going to buy this, food item because it's supposed to be, at least approved by the USDA and all this stuff like that. And again, whatever, y'all get it, right? But again, with more knowledge becomes more power. And of course, from that, power brings profit. So we say that a lot. We use that mantra to keep us, it keeps us grounded, in a lot of ways, because if not, it's easy just to, jump out there, or what they call dive into diverse temptations, and just trust the market, right? Trust the idea that, it's going to be exactly how you, fantasize it would be. But we know that's not the case. Why? Because we see, again, erratic movement on, on the charts within a certain stock, within the broader market as a whole. And for a lot of people, it's hard for them to really make sense of it. So in these moments where markets are somewhat very tumultuous in their entire in their movements from day to day, because of all these different variables, right, that are just circulating in around the markets, the best recipe for success, if those things are a little bit too uncomfortable for your trading style, your strategy, your setup, the best medicine that you can take is the patience pill. The patience pill is the best medicine ever in very volatile markets. Why? Because you now have a chance to sit back, put on your thinking cap, and observe exactly everything that you're witnessing in real time without feeling emotionally compromised if you have live money rotating in and out the markets. As they say, sometimes the best trade is the one not taken. The best trade not taken, sometimes it's the best trade ever. Why? Because you're getting a front row seat to get natural observation. And in doing so, that gives you more insight, more perspective, more ability to, again, do a natural recon on that particular scenario in a way where, you can feel comfortable that, you watched everybody else's experience, right? You saw the buyers, you saw the sellers, you saw the market makers, you saw the level twos, you saw the spread. Any news that might have came out the pipeline throughout the day that might have caused the market to move any kind, move the market, in any moment, right? Certain times when the algos are fluctuating, money through the market on intervals of 30 minutes, be it an hour, right? Here comes a flood of money coming into the market, the backstop, right? It happens every morning at 8 a.m. I don't know if you notice that or not. A lot of these brokers cut on their pending orders, especially at 8 a.m. Like I think E-Trade, there's a SWA. I know TD Ameritrade does it. And instantly you'll see the market just make a spaz move, right? It'll just spaz up, spaz down, spaz. And when you see a big candle and it's trying to balance in all those orders that's waiting to kind of fill into the market. It's a phenomenon in itself, right? But again, it's little things like that, it's little secrets of the market. When you become more familiar with the territory, you begin to become more equipped to deal with it, right? So, and anytime we have these discussions, we're trying to really lay all these different variables out there for the average, investor or trader. Why? Because it's better to be equipped again than to come out, or come into this industry haphazard, right? Because again, what are you dealing with? You're dealing with a system that's, set up where, those who are actively engaged in the markets in real time, especially if it's in a trader's energy, it's two things, outcomes gonna come from this. It's a third one too, but rarely. The two outcomes, either you're gonna make money or you're gonna lose money. Either you're gonna make money or you're gonna lose money. All of that depends on what? Your preparatory perspective, right? Your preparatory readiness, as one would say, right? I like to call it preventive maintenance, right? Affectionately in the military, we call it PMCS check, right? Preventive maintenance checks and services, right? You have to have checks and balances. What is checks and balances known in terms of, as an investor, what do? We perform proper what? Due diligence, right? And we have to have a level of what? Proper what? Discipline, right? Those two things are non-negotiable. They're non-negotiable. If you operate under the guise that those two things don't matter, or one matters over the other, or the other, however, you're coming into a marketplace and a trade handicap. Now you can have success, but you will never have consistency. That's the problem, right? Because consistency is the ideal of doing all the proper procedure, having a proper research methodology perspective that you put in play for every trade, and then going through that check down consistently, building and breeding great habits to form the kind of patience, there's that word again, right? To form the type of patience to wait for a particular setup that works for you. But why? Because the probability of success grants you a great opportunity to make money than to just chance it and see what happens, right? So we say patience is the virtue as a trader for a reason. That means if you're engaged in the market, that doesn't necessarily mean you just sit and watch everything happen. You never get into the market. What that means is that you wait for your proper setup. You wait for the market to offer you the greatest setups. You wait for the markets to give you the signal that you've been waiting for, as one would say, right? That's the whole purpose of understanding patience, being a virtue for you as a trader. Why? Because you do not have to take a trade. The fact that you have an account, you have money in it, there's stocks that are moving, doesn't grant the opportunity for you just to jump out there, right? If you feel like you're not convicted. Well, what do we mean by that when we're speaking about convictions? Convictions have to do with what? Again, proper due diligence and proper discipline, right? With knowledge, you make better decisions.
My phone is not getting low.
Okay, I got it. Let me mute these mics. I'm sorry, guys. We're in the training. I'll make sure. Now we have it up when people can talk, but I just want to make sure I get through this first part. All right. So in that moment, again, we want to be conscious of those things, right? We want to be conscious of the, as I like to call it, the prerequisites, right? Because, hey, how are you going to be consistent at this, right? Until we realize the importance of doing certain things right over and over and over, right? It comes as a point where you're like, man, yeah, but I should be beyond this point, or I should be able to just bypass this and go straight to this point. And what happens is the market will be like, okay, well, try it, right? And the market is like, going out there and try, let's see what works, right? Let's see if you get lucky, right? They will say lucky though. They're not going to say consistent, because they understand that the markets are not an exact science. It's going to have ebb and flows. It's going to have peak to trough moments. It's going to have support resistant tests. It's going to have a lot of, again, black swan events. We call them one-off events, where something just happened out of the blue. All of a sudden, market just flies off the handle, either up or down, right? Or there'll be days when you just have complete neutrality. The market just goes literally sideways, right? Especially if you're an option trader, you're getting what? A theta burn, right? The ultimate theta burn, right? Just burn you up, burn your premium up. All right. But again, nonetheless, for every moment that we embark in again, in this and trying to figure out all these different moving parts, it's only going to make you a better technician at this, a better tactician at this, a better surgical trader in this, a better prudent person, right? A person who realizes that their money is sacred, is to be protected. Why? Because that's your battleground. That's your ammunition, essentially, right? You're going up against well-equipped, soldiers, so to speak, right? And other soldiers, other traders, institutional money. Again, worldly issues that may always affect the company, affect the sector, affect, just the overall sentiment of how people feel about the markets globally, right? Supply chain issues, inflation, COVID. I mean, pick your poison, as one would say, right? And through all that, the market's ultimate goal is to try to do what? Price in all of this, what? Fear, right? As the saying goes, what do markets love doing? They love to climb the wall of what? Markets love climbing the wall of what? Worries, right? It's weird when you think about that, right? Like, why would people want to put that kind of level of money into a worrisome situation, right? That's like you going into a relationship with a person that that's very erratic and very bipolar in a lot of ways, and you just say, you know what, bump all that, okay, those are risks that I'm willing to take on, in essence, to try to really gain more knowledge or insight about this particular individual, right? A lot of people look at that like, no, I don't even want to deal with that. You go ahead, go ahead on with that, with that project. But again, the markets are set up to be that kind of that kind of perspective, or that kind of, read on all these different variables in a way where they can try to make a financial gain off of it. Imagine that. Again, the markets make money off of what? Tsunamis, earthquakes, tornadoes, hurricanes, war, famine, inflation, you name it, right? Supply chain issues, whatever you can throw out there, short of just complete global annihilation, the stock market will what? Price it in. We've heard that saying, right? The market priced that in. The market found a way to kind of what? Price that into its what? Its factorization in terms of what? Variables. And because of that, we shooken out all the people who was fearful of that. And now we're back to kind of what? Going back, to the, respective to the place that we were trying to go, which is up and to the right, 45-degree angle. As you look on the screen right now, because we have the S&P 500 up, right? You look at, yesterday's closing price of 435.62. We closed literally at 439, right? Well, not 439, excuse me. We closed up here at 440 and change, right? Near close to 441, and we pull back. But as after hours, we're at 439, right? Which somewhat, kind of falls into the ideal of when we speak about the ideal of how markets are, when they trade erratic and you're trying to say, trying to quell all that kind of volatility, you're trying to bring all that static noise to a halt, so to speak. Well, the couple things that you have at your advantage to do that is what? Your charting skills, right? Your moving averages, your indicators, your oscillators. We spoke about that, of course, the last couple sessions. The ideal of trusting your indicators, trusting what you see, at least from that perspective, and everything else still comes in line with what? The fundamental analysis, of course, the one-off events, things like that, news, catalysts, et cetera, right? And then the overall investor sentiment, perspective. Now, when you look at this chart that I have on the screen, just, from first glance, you say, well, it looks like the market had a great day. Well, it surely did, right? You have continuation from the previous day, right? Where the market is kind of, gone to the upside and made this kind of very definitive move, right? So we know that. Why? Because we do what? We always look to the what? We look to the left, right? To determine the future, right? We look to the left to determine the future. When we look to the left in this perspective, we see what? A moment where the market had, I guess it was going through a flux and trying to figure out what they want to kind of, still kind of what, inch its way to the upside. And in one instance of that moment, we had a what? Somewhat of what? An egregious pullback, right? A very pronounced pullback. Like what caused that? Of course, we know what caused that because we were already, waiting for some form of a binary event. The Federal Reserve speaking, right? Because we got the Fed minutes that came out, the FOMC. What did that entail? Things that, the global markets were waiting to hear, right? Especially being our central bank is pretty much the premier central banker of the planet. Why? Because we are the bigger market, right? So it carries ripple effects across the globe because a lot of other traders also trade our markets. A lot of other people trade our markets, even in Asia and Europe and South America and Africa, Australia. They trade our markets too, right? You can trade other exchanges, right? Through your brokers. You can definitely call up your broker and say, hey, I want to place a trade in the Hong Kong exchange. Here's the ticker symbol, right? You just have to pay what they call like a relay fee. And they'll put that trade on you, put that trade on for you, with a fee, and you could trade that asset, even if it's not on our exchange, right? Especially if the ADRs we have on our side, you want to trade the actual stock on their side that's listed, direct, you have access to that. But and saying all that again, the access to the market is broad, right? It's a lot of people trying to access this money. And that's again, we watched the market here pull back on that news. And then we came into a scenario where you got an explanation to the reason why the market or the Feds, in this case, we'll just use that, were doing what they were going to do, which we already knew in advance that they were going to do that. Therefore, it was no surprise, right? Those who were initiated in understanding how to stay on top of the news or on top of any kind of information that gives them insight, which we're supposed to do as investors and traders, right? It's part of our due diligence, right? So one would say, this is your due diligence, right? To know what's going on at all times, best as possible, as much as possible, right? So we were already headed there. The extent to how the market perceived it is another. Why? Because not only is it humans trading this market, they're also what? Algos, right? They're algorithms that are also trading this market. Those algorithms are very, very, they're very like robotic in terms of they don't care about, individual investor sentiment. They have a goal, they have an agenda. Again, you think about it, it's a robot, right? It's saying, it's like a code, right? If not this, do this, right? And or, right? That kind of reality. And essentially that's what's happening, right? It's programmed to listen for certain keywords, buzzwords, talking points, certain speakers get precedence, a president, a prime minister, a key figure that has a lot to do with the world market as a whole, a President Xi, a Putin, a Zelensky right now because of the war scenario. A lot of times those algorithms are programmed to buy that fear or to buy the ideal of when this person comes on, if there's any kind of abnormality within the market, they'll be set to buy the market with anything that they may say that may be of a pressing topic or issue that affects the global markets, right? I mean, it's like it's crazy when you think about it, but that's the nature of markets. Again, it's the ideal of that is trying to price in fear, because if that person is speaking, then apparently it has something to do with something that's kind of a little bit more magical, right? Than the average. Okay, well, yeah, somebody, got mugged at the local grocery store today. It was unfortunate, but they was able to survive, right? It's different than that because these are global type of economic conditions that affect the global markets, right? So they carry weight, is my point. That's the whole idea of, behind that. And someone said, okay, well, yeah, we got 25 basic point rate cut. Everybody was waiting on it, and what's the big deal? And the markets are been oversold for the longest. Why shouldn't we rally? Well, of course, you're still under the guise of understanding how the market is trying to price in all this fear, right? It's trying to price in the idea of, we were kind of waiting for this to happen. Now that it has happened, we should be back to what? Playing ball, right? It should be back to where it was before. But then you say, wait a minute, hold up, right? Hold up, big swole up. Right. And you throwing that big old stop sign, right? You throwing that stop sign, and that stop sign tells you what? But guess what? But wait, there's more, right? There's more than just a rate hike that's causing our markets to be in a state of flux, right? This state of volatility. And then you say to yourself, okay, well, what are the other things that are still pressing the market that was an issue before we came into this big binary event of rate hikes? Okay, there's still inflation. There's still what? What else we got going on in the world right now, family? What else we dealing with right now that affects the markets? Anybody? What else are we dealing with?
Pandemic.
All right, so we got the pandemic still on the chopping block. Actually, China just went back into lockdown. They locked down several of their provinces, and a couple of them very profound. Why? Because there are certain suppliers and manufacturers of a lot of the goods that come into America, i.e. Apple. Right. I think two of the factors in the Shenzhen proverb, definitely one is known as one of them is I think in Wuhan, through Foxconn, that shut down as well. So that means that production for those iPhones are now on complete halt. While those, that nation or that, that province is shut down. Does that affect Apple? Anybody? I'm asking for a friend. Does that affect Apple's business?
Yes, it does.
It would clearly, cause a cog in the what? In the wheel, so to speak, right? Or, a monkey wrench into their business plan. And then what you would hear from the companies, like, yeah, we got this problem, I want to let you guys know. Wall Street will look at that, say, okay, well, how long is that, factory going to be shut down? Okay, 2 weeks, a week. Okay, what's the, output that factory pumps out in terms of Apple iPhones on average? Okay, now let's do deductive reason. If we stand to lose this many items or these many, units during this time frame, would that really affect, inventory that we already have, you're in escrow, and or the ability to account this, for this lack of production on our balance sheet going into the next earnings cycle? Y'all with me there? This is what these people are doing, right? You're running a business, right? This is, of course, this is not child's play, but it's not it's not out of the realm where you can, conjure up the idea and figure out what it takes to run a business based upon all these different moving parts, right? And hence the end result will be whether or not, if it's a big enough impact or not, it'll show. Where would it show first? At the store where you go to buy the Apple store? Would it show at the Verizon store? Would it show at, where would you see that first impact of that kind of news? Say again, somebody. You said the chart? Somebody said the chart?
Yeah, I said you would see it in the chart.
Right.
The chart be reflected.
In this case, we say the chart, we definitely talk about the stock itself, right? In that regard, you can go look up Apple stock, right? Essentially, right? And say, okay, well, this is, this is not good, right? That's what I'm saying. This doesn't look right. And it's Apple of all stocks, right? Like Apple definitely don't take L's like that on average, right? That's just not, part of their, their business model, right? They don't take L's on average, right? It's just not, just not their thing. And so the first thing we do, we run to what? Just like Obashan was saying, we run and go see what the stock looks like. Or, if we get that news just in passing, first thing we do as investors or trader, we go what? We go do all our scouting, right? We go see exactly, how the stock is faring in this moment, right? So in GP, we run over to Apple here. And of course, this is after the fact. Everything from this point here is after the fact, right? After the fact. Then we become, again, this is what we do for a living. We have to do our reconnaissance, right? Our reconnaissance. We have to go see what the damage was before, if there was any, right? And so we say, look to the left, right? To determine the future, right? You always look to the left to determine the future, right? We go back and back test, right? We go back and see if there's any kind of abnormalities that, might have affected the company or the stock, et cetera, whatever, right? So let me do this real quick here, make sure we have it. Okay, it's January, so we got enough space. If you come back now and you look at it from this angle, then you say, oh, before you back the chart up, it seemed like it was everything was all gravy, baby, right? It was good to go, right? Just a good, it was all good just a week ago. In this case, it's all good today as opposed to a week ago. Why? Because what happened when that news came out? What was the stock doing? It was definitely pulling back, right? It was definitely pulling back. And you had moments where the stock was actually trying to present itself as a potential bounce with a clear as day double bottom here, coming back to resistance here, and then you fail, right? You fail into that ideal of, I guess, the news that, again, China going into lockdown, et cetera, such. Of course, all that stuff happened literally over the past week, right? We got news that they were going into lockdown. Adverse, again, effect to that is what happened to China, Apple stock. Apparently, investors didn't feel that comfortable about it. Well, we know there's other factors too that were weighing on Apple stock. What are some of those other things that were already weighing on Apple stock before that news came out about China going into lockdown?
China and Taiwan war.
All right. That's a very interesting one, because that one is still ongoing. The idea of it, right? China and Taiwan, right? You got China and Taiwan, right? What else? Anybody got any? What else was going on in the market that made it also still put a pause on Apple stock from going up? Anybody else?
Consumer spending.
All right. So when you say consumer spending, meaning what, you feel like people weren't buying the products enough?
Well, I was just looking at a report that consumers getting a little tight. With the gas prices going up, they're not gonna be more willy-nilly to, even though they got a lot of money on it, or they say on their balance sheet, but they're not gonna be willy-nilly with gas at $4 and $5 and $6 a gallon. They're not gonna be going there to buying them, what they call it, impulse buys.
Right. So discretionary item, they call it consumer discretionary, right? So anytime you buy from an indiscriminate perspective, right, or discretion, you're choosing what you want to buy. How many people gonna be running to buy a luxury iPhone now for $1,000+ with, again, like he's speaking to, gas prices are going up, grocery bills are going up, right? Of course, we know that initially it's because of what? It starts with the I. What's the I word? Good old fashioned what word? Inflation, right? That inflation, boy. We learned a whole lot about inflation, but we're going to crash course on inflation, ain't we? And this is good because, again, you need to know how governments work. You need to understand how the global markets, work as a business, right? That's basically what it is, right? It's supply and demand. It's a product or a service, period. In the discussion, right? But these are, again, what they call those ancillary layers of things that may affect, right? That may affect an individual company, that may also affect a sector, that may also affect the broader market. Now, if I ask a very simple question like, okay, do y'all feel like Apple stock as a whole carry a lot of weight when it comes to its, technology sector? What would you guys say to that? Do Apple carry a lot of weight for tech stocks as a whole?
100%.
Right. So y'all would say 100%, right? Like
100%.
100%, right? Now, if you think about it from a sector perspective, tech stock, what about the broader market? Does it carry weight in terms of broader market?
Yes.
Right. Y'all agreeing with that as well. Well, how do we know that Apple carries that kind of level of weight? Right. Yeah, Apple like the big meats, right? Apple is big meats of the stock market, right? Big meat. How that little song go? Larry Hoover, big meat. Y'all old school with it. That's what Apple would be, right? Would y'all agree with that?
Mm-hmm.
How do we know that?
They got the biggest market cap.
All right. Somebody went straight to the meat and potato. Like, look, they got some money, bro. Right? They got a lot of what? And some people say what? They cover a lot of the market share for its particular products that it offers, or even the services that it offers as well, right? It commands a lot of the market, right? It has a lot of faithful clients, right? Consumers, as one would say, right? Therefore, this is why, right? Apple is being able to, to carry that kind of level of power, right? As we say, knowledge brings power, you can profit, I guess, right? It's the same reality at the end of the day. It's the same thing, right? So real quick, we jump over here, look at the chart on Apple, right? And we see what, right? We see just that, right? The first thing we always go check on a stock, of course, is what? Market cap for most cases, right? On the fundamental side of things. Now we marrying technicals with fundamental. We just looked at a little bit of the technicals. The technicals showed that the stock was pulling back, and then eventually it started to bounce. Well, it bounced because of what? Well, we know what some of the reason why it potentially bounced, because it was attached to the broader market. Because of what? The idea of the inflation, rate hike being kind of priced in, so they got a reprieve bounce for whatever reason, how long it's there. But look right here, and this could be off by a little bit of money here and there, but Apple has a market cap as of somewhat we'll just say today, $2.6 trillion. $2.6 trillion.
Mm.
They have more money and market cap than nations have on this planet. And some of these nations are dang near first world nation. And Apple sits with 2 trillion on their balance sheet to rival their entire GDP. Let that marinate for a moment. As the saying goes, one man should not have all that power. Y'all heard that saying before? One man shouldn't have all that power.
Mm-hmm.
It's since here's a company that commands all that power just from selling devices, knickknacks here and there. Of course, they ain't really put out any kind of real, groundbreaking innovation over the past like 15 years. Wink, wink. But anyway, nonetheless, they sit with a $2.6 trillion balance sheet, or at least market cap, right? They can borrow against that 2.6 trillion. That's the whole ideal of debt to equity ratio, right? You command that level of equity, right? A lot of it is future valuations too. Why? Because they're getting priced for their future, for perfection. What Apple will do into the future grants us to give you such a valuation now. And because of that, your market cap is equating to your potentiality. Now imagine they gave you all that kind of valuation on y'all life right now, and right now in this particular moment. A lot of y'all be sitting well over millions and billions of dollars worth of valuation. Wouldn't you be? Wouldn't you think that? Right? Given the opportunity to go out there and perform, knowing what you know, what you've learned, yeah, you would say, okay, y'all front me this money, I'll go out there and make it happen. Right? But of course, it definitely sounds good, right? On paper, right? But we know that this is the game of we're gonna protect those who protect the system, right? Protect the situations that are more as they say, they're playing ball. I just leave it at that. They're playing ball. And we're seeing that through the ideal of the woke culture, right? The cancel culture, right? The virtue signaling because of what's happening in Russia and Ukraine. How these mega corporations have pulled out of Russia to somewhat spite them in order to support another company. But guess what? Or country, excuse me. That has repercussions, does it not? Well, the same reason why we saw how Apple is having problems with the fact that their factories are shutting down because of COVID running rampant in China right now. When in the Shenzhen proverb and dealing with Foxconn, which is the biggest producer of their iPhones, guess what that also does? That's compounded by what? Again, we spoke about some of the things. Inflation. It is also compounded by what? Obo spoke to that a little bit. It's compounded by what? Consumer, discretion spending. People not necessarily just going to rush to get an iPhone now when they worry about the price at the pump, at the grocery store, paying their utility bills. Gas and utilities are through the roof right now. Again, all these different things that come with child care, whatever. All these different things make up more of a pause or a patient thesis, so to speak, on Apple stock than it would be just say, okay, well, hey, but it's Apple. They got a $2.6 trillion market cap. It's Apple, bro. Come on, they like the biggest company on the planet, right? Because you hear a lot of traders that take that approach all the time, don't you? And they'll tell you, man, but it's Apple. That's why I'm gonna buy it. And then they'll say, okay, well, I'm gonna take my position here. I'm gonna start my position right here, right? I'm gonna buy this little point of support here. It looks like it's holding up right there. And what happened? The stock pull back. It comes back, tests again, pulls back. It come back, tests again, and then it just dump, right? Well, guess what? They didn't take the stock here at this moment, not knowing some of the potential risks. Now, some of these things are black swan events. Some of them are just, natural aspects of doing business. And then in other cases, it's a what? It's also a broader market syndrome. They call it the broader market syndrome. The broader market syndrome is what? What's happening in the S&P? What's happening in the technology sector as a whole? What's happening in the bond markets that affect what? Overly leveraged, high growth stocks that depend on what? Low interest rates to really get what? Bigger margin off their product base, right? Of course, Apple is definitely a recipient of that, clearly. So a lot of moving parts is my point. But within that, again, we're dealing with what? We're dealing with the idea of figuring out what are those things. We put them on the table, we weigh them up against each other, and then we realize whether or not this is a great investment, be it momentarily or somewhat in the future. Because the greatest thing that most people deal with, for the most part, especially every trader or investor, is what? When or where to buy a stock and when to buy it.
So
right?
bad.
The saying is what? Look, just buy it, right? You hear people say, "Oh, just buy it," because of what? It's Apple. Like we said, it's a $2.6 trillion company, bro. It's Apple, bro. They got Apple TV, they got Oprah, right? They got Steven Spielberg, right? Oh, somebody got a little feedback. Let me see. I'll mute everybody for a hot second, just for a hot second. It's Apple, bro. Just buy it because it's this company, this, that, and the third. But we know it's more than just that, right? Why? Because proper due diligence and discipline tells us that what? We have to be patient before we jump out the window and buy anything. Again, you don't buy, certain things out of the store, just because, XYZ without doing a little bit of research, right? At least for nothing else, you can see if you can get a better bang, for your buck from one store to the next, or, or equal or greater product for less, right? You would do that kind of research when it comes to that for the most part, right? I gotta say that for the most part. Some people just don't care. They go to so just buy it. But when it comes to your money, when it comes to the stock market, if you fail to take that approach, what's going to happen? Are you not driving blind? Are you not investing blind? Are you not, putting forth the greatest, model or ideal or business plan, essentially to come up with a great return with your money, right? You're not sending your money to battle, again, unequipped. So we say, okay, wait, before you jump out the window, let's go through a checklist. Let's do a little reconnaissance on the market. Let's do a little reconnaissance on its competitors, whatever, that's out there. Let's put those things on the table first, and then we will go through the process of figuring out whether it's a good buy or not. Apple, again, at this point here, at let's say 150 or 160, after it's been downtrending, shit tells you what? Okay, well, if we think we're at the bottom, and I think right now is a good time to add to my position, again, what are the factors that may cause the market to go lower? What are the things that could potentially move the market higher or move this stock higher at this point? Because it's under those same, it's under the same rules of engagement as a Boeing, right? As a, NVIDIA, right? Okay, go ahead, Sister Shanika, so you got your hand up real quick. I'm sorry.
All right, that's Apple you're talking about, the Apple stock?
Yeah, this is Apple. Okay. Can y'all see my screen by the chance, guys? Is it showing? My bad. It's showing. Okay. Yep. So in this moment, we're putting all those things into play and trying to figure out what are those variables, right? Are they more plausible variables? Or are they more of what, a detriment, right? Are they a pain, or they're what, a somewhat of a pleasure, right? As one would say, a risk, or is it a what, somewhat of a great opportunity for a reward, right? And then we do what? Now, looking at the chart from this perspective, we see what? A big old pattern starting to form here in Apple. Now, before what we got out of the last couple of days with the market just been ripping to the upside, right? We know what caused that. But outside of that, if we back up just a little bit further, now what do you see? Right? We're taking on a different perspective here. We have a whole new different outlook here now. Then it becomes a game, okay, well, this stock was already under pressure a little bit. Yeah, it's still Apple, but yeah, it's still under, again, immense pressure from a lot of different, reasons, or because of a lot of different reasons, again, as one would say. Income, all the other ways to look at the market and say, okay, well, all right, well, under these, parameters, under this perspective, what should I do here, right? Is it a good investment here? Like I said, at 160, right? At this point, when we were looking at it, at that point right there, without knowing what was happening, over here, back over here, down here, right? Now it becomes a game of, oh, wait, whoa. I'll about to jump out the window there and go all in on Apple at 160 here. And then upon further review, right? Upon further analysis, right? Somebody draw on the chart here. What do you see here that may cause Apple here at this benchmark point right here, 160, to cause pause whether or not this is a good investment or not to go all in on Apple at 160? And this is before, again, the news that came out with China going to lockdown, right? Let me add the little arrow there so we know exactly what I'm talking about here. Somebody draw on the screen here in this moment, while you'd have had possibly have paused to buy Apple at that point right there. Right? What will be the greatest opportunity to utilize patience before you jump out the window of such an opportunity? Anybody, draw on your screen here, use the markers, go to annotate tab, get that draw pen, and what do you see to the left of that marker that I have here that may have caused you, some pause before you jumped out there to, and bought Apple? Anyone, anybody? If you need help trying to find the marker, let me know. We'll help you out with that too. What do you see there, guys? Somebody give me put some perspective on that thing. Put some respect on that position, right? What do you see here? Because we know the markets move, and I'll just kind of hint to it a little bit, right? We know markets move basically on what? Through aspects of trend and also what? By virtue of what? Patterns, right? So some of the patterns that you're going to learn, right? Some of you guys at different stages of this, we granted, all right? There's a lot of different patterns that we see when we check in the market, whether or not these are great moments to what? To establish what? Buy opportunities or sell opportunities, right? If you cannot spot those signals or those scenarios,
Resistance.
then that means you're trading blind, right? Somebody about to say something. Go ahead. I'm sorry.
I said resistance.
Right, or resistance points, right? So resistance points, support points, pivot points, supply, demand, order blocks, right? The whole reality, and trying to, again, dumb the market down. Of course, we use a lot of very basic things that we use to help our situation, right? What do? We put the market into channels, right? Into boxes. I call it the kill box. You can call it the happy box, Pandora box, whatever you use. I put the market in the kill box. I do deductive reasoning, figure out the levels that are, opportunistic, and then I trade it from there. Why? Because I'm mapping out money. Essentially, that's what you do as a trader. You map out money every day, all day, every day. Now, if you trade the market all day, every day, even if you do this stuff in your spare time, from a long-term thesis or a short-term, you're still mapping out money per every time you get ready to put on a trade. Every time you open up a chart, every time you go through the fundamentals and figure out what are the different variables that may not drive that stock, you're putting on those layers, right? You're putting on layers, right? So you gain a lot of insight in knowing, number one, what are you looking at? Why are you looking at it? Where may be a good opportunity for that, that position to come alive, or this trade to come alive, and when to actually pull the trigger. Make sense? So that's why we use that 4 pillars, right? What, why, where, and when. That removes a lot of the clutter outside of your trading or investment thesis when you learn how to compartmentalize and dumb down the market. Why? Because you're trying to kill all the volatility. You're trying to kill all the noise. You're trying to get outside even your own head, right? Because in your head, you got a battle going on too. Should I, shouldn't I? Should I, shouldn't I? I don't know. You watching it. And that's where, you might have had an idea of where you might want to get in there, and you sat and watched it, and the stock just goes, it takes off and leaves you, right? Or it dumps. And okay, good thing I didn't buy right there. Woo, boy, they saved me because I was about to do it. I was about to jump out the window, right, with no parachute. Well, guess what? This is what makes, again, this is why patience is the greatest medicine as an investor trader. Why? Because proper procedural steps that you took, ahead of time, granted you that ability to make that kind of executive decision in that moment. You're not feeling like you're just, okay, I'm just chancing it. You don't have to chance it. When the market is already telling you or signaling to you, this may be a great opportunity. This may not, right? It's up to you to do to do what is necessary in that moment, and the rest is history. So we just talked about that, right? So I asked you guys, if you look to the left of this moment here, what I have on the arrows here, you look to the left of that, right? To the left of that, what do you see in Apple stock technically that may have caused you to have pause, and whether or not you want to buy Apple at this point here and maybe go, start your starter position and go long Apple stock? What are the signals? What is the chart speaking to you? What is it saying? Even if you don't know anything even about technical analysis, you look at this position that I have here on the chart here, this area of operation or area of interest here, from here to here, does it look like Apple stock from here, this part here, to down here? Does it look like Apple stock is performing well from that perspective? Right? If you looked at it from that perspective, does it look like Apple is doing really well from up here And now coming down to this point here, does it look like it's doing very well at that point? Right. Clearly it looks like the stock has come down some, right? It looks like there's some weakness there or something, right? But aren't we told to what? Aren't we told to what? Buy low and sell high? Haven't everybody, have we gone through that mantra like a million times? Buy low, sell high, bro. What are you doing? Right? Buy low, sell high, sis. What are you doing? Right? We've been taught that, right? So isn't this point down here lower than this point up here? Right? Y'all agree with that?
Yeah.
Yeah.
Why not? Why wouldn't that be a great buying opportunity right there then? If you're looking to start a starter position.
Still more factors you got to reason in. The structure look like it's down structure. So yeah, it's other stuff that you would have to factor in before, like you said, don't just jump in or jump out the window without a parachute. You got to do the research and prior to.
Figure out all these different variables. 1000% right. Why? Because everything that looks good is maybe not be good. In this case, as an investor, what look good to us is what? A stock that's what? Downtrending, right? Because at some point you say, well, it's going to bounce, right? Or the ideal of we buying low to sell it potentially a lot higher, right? I don't want to buy at the top. Again, is that area right here? I know I got all this stuff on the screen. Let me clear up just for a hot second. Is with that area right there still, equate to that of what? As a moment to what? To buy low, right? To buy low, right? Excuse me. In this case, you're buying it low here just to sell it higher. Excuse me, right? You buying low here just to potentially sell it higher, what, much later, right? So technically, again, going back to that point of technically here, I guess I'm beating that little dead horse for a moment until when he got did. And I see somebody already wrote in the back chat, in the Zoom here, what's going on here. And I don't know, he may not can write it, draw it on the chart, but Brandon put out that he sees a pattern forming in Apple in this moment that may cause him to possibly have pause, whether or not he would have bought the stock or not. He put that as a head and shoulders pattern. Do you guys see a head and shoulder pattern as well? There it is. Somebody already drew, and he already on it. See, there it is. Right? Do you guys see the same thing?
Yeah.
Would anybody not sure about that? Anybody agree with that?
Yep. Right there.
Right? So we got a head and shoulders pattern here. Right? You got a shoulder. Right? Head, another shoulder there. Now, what does a head and shoulder pattern denote? Is that bullish or bearish?
Bearish.
Sometimes when people see that on a chart, even though they've been trained to look for that kind of stuff, they'll see it and they'll still go against. How many people do that a lot? More than you would think. More than what you would think. Why? Because in any moment, when you at a pinnacle point where the market is saying, okay, yeah, under this, parameter, these rules of engagement, I need to be getting short here, or I need to just be sitting still and not trying to trade Apple here. As soon as the market make it what? Run that joke up about 90 cents, 70 cents, $1, you start having what? Oh boy, they finna run it. I'm gonna buy me a call. I'm gonna buy me a loan position. Just in case, right? That's what you be saying, like just in case. Now, overall, withstanding the fact that the overall trend presents to you that it has a probability that it should be more of a what? A short trade, meaning a short sale or a bearish pattern. Right? To go against all that data, all that research, all that due diligence, all that discipline. We're talking about patience here today, right? Right? As they say, let the congregation say, I get it, right? That's our new thing, right? We got our own little parishioner scenario, right? The preacher say, let the church say amen. We say, let the congregation say, I get it. We get it. You know what's going on here. If you go against those rules of engagement, what's going to happen? What is the probability that you're going to have some problems?
Lose money.
You're going to definitely have some problems, right? You're going to possibly lose some money. Head and shoulders, again, tells you that you're dealing with what? You're dealing with something here that's, presenting weakness as opposed to strength. Hence, that's what a head and shoulder pattern denotes. It denotes what? Weakness. And how do you measure the move of a head and shoulders pattern? Some of this stuff is elementary for some of you guys, but we go back to the basics a lot. We mix and match a lot of things, and from basics to intermediary to more advanced. It's all to keep you what? Sane, to never missteps when you're trying to put together a thesis or a trade. And that's to make sure that you did all your checks and balances. You know what you can do before you put that live money on. Why does it matter? Because guess what? You running a business. You do not. That's like you running a business, a brick and mortar. You take all your items, or at least a portion of your items, as opposed to having a sidewalk sale. You do an up the block sale. You take mannequins out your business, take them up the block, not in front of your store where you can see it, but up the block, put them out on display, and say, hey, come down the street to my business. You got nobody standing out there in front of that stuff. You can't see it. You inside the store, listen to some Teddy Pendergrass and stuff. And people walking by like thinking these clothes are what? This must be a thrift sale or something. They just get with this stuff. I see the sign say, come down to my business. They just take the clothes off the rack and just keep walking. Like, someone make that make sense. Again, a lot of people do that when they put on trades. That's the game plan. They're expecting people to take the moral high road, to affectionately look at your position as your little position that you just put on. Guys, okay, we're gonna work hard to make sure this person makes some money. Mind you, they trading against the market right now, right? They're doing a directional, bias against the money flow of what the market is trying to signal to them, but they want you to respect what their moment and just give them some money anyway. Does the market do that, guys?
Question?
Yeah, go ahead.
Mm-hmm. Hey, well, now why wouldn't you buy that support right there when you got that white line at? Why wouldn't that be a good time to buy? I had to get my car washed, but why wouldn't that be a good buy right there? Just like.
No problem. So when we talked about patterns, right? Patterns, trends, we still learning patterns and trends. Everybody getting at different levels of this, right? So initially, if you look again at that line, we just drew that as what they call like a safety line, right? Like putting like guidelines and grid lines on the market. If you look inside of that whole line, you see like over Brandon Drew, right? He spoke about that. There's a pattern that formed in Apple in that moment. What is that pattern that you see on the screen right now? If you're able to see it, what is that pattern called?
It look like a head and shoulders, but
right.
I don't see
that. I don't see that. That's it. You got it right. It's a head and shoulders pattern, right? And a head and shoulders pattern, again, it denotes what? Bullish or bearish. Is that a bullish signal or a bearish signal? Where
is that? It's a bearish signal. Well, I know about head and shoulders, but I think it's a bearish signal.
Right. So it's a bearish signal. Now, probability tells you that if it's a bearish signal, or if a person that understanding what a head and shoulder pattern is, of course, you would go to what? You go to Investopedia. I know that's our favorite website, right? Primary source that we go to for everything that has to do with us asking a question that's something that's on a more technical perspective, right? You go to that Investopedia, you pull it in there, you put it in there and see exactly what a head and shoulder pattern is, right? So again, GP, just for the, for training, as we like to do, right? We like to go, they say they take it to trial, right? Take that information to trial, right? We're gonna go right on over here, right? Come right on over here, and we're gonna put in what? Head and what?
Head and shoulder.
So you should not have to ask a lot of questions, and most times when it comes to these kind of ancillary things, and kind of go through the idea of pulling your hair out, trying to figure out what's going on, right? You know what it is, right? So let's go see what Investopedia had to say about the head and shoulders pattern, right? All right. So we come right over here to the to the definition here. It says what? Head and shoulders pattern, right? What is a head and shoulders pattern? A head and shoulders pattern is a chart formation, right, that appears as a baseline with 3 peaks. We just saw the chart. Did it look like a baseline value with 3 peaks on top of it?
Yeah.
Exactly how I drew it, right? Exactly how Brandon drew it, right? Where the outside 2 are close in height and the middle is highest. Obviously, what? From shoulder to head, right? You look at a person, if they spread their arms out, of course, you see you got a shoulder, you got a peak of head, you got another shoulder, right? So it says what? At close in the height, where the outside 2 are closest in height and in the middle is highest. In technical analysis, a head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. Now, notice it said bullish to bearish. It didn't say bearish to bullish. It says what? From bullish to bearish. Well, what makes it bullish to bearish? Why? Because you started from a shoulder that was lower, it went higher. There goes to what? It went from baseline bearish or just neutral to bullish, came back down, right, to that shoulder, right, and went higher, bumped up just a little bit again. And now you at that nexus point where you got to make a decision whether you want to get long, or you now need to try to think about getting short. Make sense? It gave you that they call that trifecta, right? That triangle pattern, right? That pyramid pattern, right? Then lies how you will make that assertion whether or not this is a good trade to get long, or potentially to be patient or to go short. Now, if the market tells you these are the rules you need to follow, at least, to the extent that these things been tested before throughout their, use case and this, that, the third, when people putting this on, what will possess a person to go against that and buck that trend? What would cause a trader to say, you know what, bump all that, bro, I'm finna get long?
FOMO.
Right? It's FOMO, right? Somebody said FOMO. There it is, right? So what is FOMO? What is FOMO?
Fear of missing out.
Say again?
Fear of missing out.
Fear of missing out. I always ask people, what are you missing out? That's the biggest thing for a lot of traders to deal with. They feel like they're missing out. Okay, you missing out on $1 bump up or $2 bump up. Oh man, the world, again, that's money. Granted, I get it, it's money. But hold up, is that? I'm sorry, that's my doggone Fitbit thing over here buzzing. Yeah, that's again a dime, dime worth of business, that's still really not equating to the potential of $1 worth of gains coming on the back end of that dime business move. As y'all heard the saying go, a dime holding up $1. Well, those people that was bullish that was bought it just to get that little uptick for a couple dollars, right? They got an uptick for a couple dollars. They made money, granted, if they was able to catch it right on time. Right now, it becomes a game of timing. But the bearish trader that saw that that pattern formulating, he's like, okay, yeah, y'all have your little fun right now because it's coming down, bro. I see a head and shoulder pattern. I see baseline. I see a shoulder. I see a head. I see another shoulder, and we coming down, bro. That person gets that little $2 and he get out the way. You put your position on and say, I'm gonna wait. You might have even took $1.02 worth of pain while they kind of inched it higher. And guess what? And eventually the probability tells you that our head and shoulder pattern is gonna fall to the to the downside.
No.
Now, when you falling, now here's where it gets magical. Because we're talking about patience here, right? Today's conversation is dealing with patience, right? Patience is a virtue. And again, on top of that, basically how to price in fear, how to determine, how to, eliminate fear. Because actually FOMO is the same thing, right? What is FOMO again? Fear of missing out. Well, what are you missing out on? That's the question I ask people all the time. What are you missing out on? Are there not other stocks that are going to be running? Are there not other opportunities that are going to come around? Are there not other setups out there that's getting ready to set up the offer opportunity too? What are you missing out on? Simple question, right? It's the human experience of thinking that you got to be right. You need to be validated. That's the only thing that would cause people to make those kind of trades. You want to be validated. And in this case, what's preceding you? Your money. But if you lose money, that's going to hurt. Now, you may have it to lose, but it's going to hurt. Why? Because you're like, man, when I say it's going to hurt you kind of your intellect, so to speak. Like, man, I thought I had this thing mapped out right. Or if you put in no due diligence at all, then you already going to know why you're going to lose, right? Because it's like, man, I just thought it was going to make them, go my way. Well, you know what that is. That's called what? It's called gambling, right? You just gambling, right? You might well go, play some blackjack or throw them dice or something, right? Right? Play some CeeLo or something. Well, that is exactly why we're not here. We're not here to prove that, we're good gamblers. Market do come with a level of luck too. We get it because it has binary events. Stuff that you wasn't planning for, it happened. War, famine, death, horrors, whatever, right? It didn't get a chance to price that into its It's equation, right? It's algorithm, right? And because that the market goes down or it rips and goes up. Might be good news. Make sense? So going back to the conversation in terms of how you map out that head and shoulders pattern, how do you map out the head and shoulder pattern? How do you determine the length of a move that you potentially can get in a trade once a head and shoulder pattern is what? Is formulated? How do you determine that? Anybody?
That's what I'm trying to figure out.
Right? Anybody else want to take a tackle of that? How do you determine the length of a move that you should get potentially in a bearish denoting pattern of a head and shoulders?
Hey, over here to the shoulders.
Yeah.
Say again.
The distance from the head to the shoulders, or
Right,
shoulder
so
line.
Right. So the distance from the head to the shoulders, right? In this case, it's what they call it the what? The neck. What? Go ahead. Somebody about to say something?
Neckline.
Could you repeat that? Sorry.
How do you determine the length of a move, right, of a particular stock if it's completing a head and shoulders pattern? Because you can actually map out money, the potential money, by the rules, quote unquote, the rules of engagement. When you see that pattern forming, and when they kind of complete that pattern, you say, okay, this thing should move a certain amount of what? Points, right? Or some dollars, right? Well, again, once you understand what it does, right? It's determined by what? The length of the neckline, which is going to be what? The neckline going to be right at your neck, right? Like, if you get my neck here, from everything from my neck here to the top of my head, that's going to be what? Potential money, right? In y'all case, that is where your money at, because that's where your greatest weapon at is what? In between your ears. And y'all need to start using it. Why? Because they using theirs against you every day. We're not finna play the role of John here. We ain't finna blow our backs out, our knees out, our elbows out. You know, you ain't gotta go through all that, right? No, we look, unless you want to, but here we're trying to be what? Literate, right? We want to be prudent. These things are set up already in play to give you what? Winks tactics that you can use to benefit your situation, right? Head shoulder pattern tells you that it's a reversal signal from what? Bullish to bearish, and it's gonna what? Pull back. So just like Oba was saying, over Corey, over Rich, a few of the brothers in here were saying, what? You determine it by what? Neckline, right? Let me get a different color. It's not standing out too well. You determine it by neckline to head, right? Or hairline, right? Y'all see that move right there? That's determining the distance of potential move that you can get when that head shoulder pattern completes. If you take it from there, come over to the end of this neckline here, even though it tried to bump up $2 here and draw in some people, right? Again, they call it a bull trap. Trapped a couple of bulls thinking we get ready to go long. That's that guy that was saying, you know what? Apple is back, bro. I'm finna start a position here, 160. I'm finna get long Apple, bro. And you come in like, you sure you want to do that, bro? I'm buying puts. I'm finna short this. No, bro, you finna get ran over, bro, to the moon, bro. Win Lambo, bro. All right. You be like, all right, good luck. All right, good luck. Because now you're under the what? You're working under the rules of what? Patience. You're working on the rules of patience. Why? Because you did everything you were supposed to do to be in this position, to read the market as it's telling you, to understand the volume, to understand the fundamental analysis. There is one. Understand the technical setup in terms of what the chart's showing you. And understand the value of investor sentiment. What does everybody think about the stock in this moment too, that understands this pattern and how they may be trading it. And a lot of ways you can go and check that to see exactly what everybody's looking at too. Why? As they call it, checking the temperature of the market. Well, as also regular equity traders, we also what? Follow the options market. Even if you don't trade options, you can follow the option market. Will give you cheat codes or signals to let you know what the broader market is thinking about.
How you do that?
Going straight to the order flow chart. You go straight to bar chart and see what that put to call ratio is. It's just another layer of what? Opportunity that you now factor into your trading schematic to say, okay, dang it, I see a lot of people loading up on puts. Why are they loading up on puts? And the market like it's getting ready to bounce. You be like, oh,
where's that at?
Go ahead.
Where's that at?
Say that again.
You say put the call ratio on bar chart.
Right. You go to the order flow chart, right? So you come right over here real quick. We'll run over here just on GP, right? Mm-hmm. You come over here and you look down on the stock, you put in whatever that ticker symbol, it'll be Apple, whatever. I got this company here, Stone Company, right? This company, trading here in the earnings. They had earnings tonight. You come down and say, well, let me see what, you come to the option tab, because if you knew this all together, you put in the ticker symbol up at the top, you come over to the left-hand side where you see all these things, like technicals and options, right? Especially if you're an option trader, whether you trade or you don't. It's just another way to look at, again, volume, right? Potential money people are placing in a contract form to a directional bias that they're looking to potentially choose. That's the greatest outlook you'll get, because these are binary bias, meaning when they're bought, they're recorded, right? They're recorded, right? You can't dark pool an option trade, right? You could dark pool equity, but you can't dark pool options trade, right? It has to be recorded because they're derivatives. They had to be accounted for, is my point. You come over to the options thing, it says option prices. You click on that option prices tab. You come down to the very bottom. What do you see?
Put the call ratio.
Y'all see that right there? That put the call ratio. Now this company here, again, this company I traded in the earnings night. Stone, they had earnings, whatever. But just use this as a quick little case study. What does the call volume look like in relation to the put volume? Would that be a bullish or bearish readout?
It's more calls to puts.
Would that be bullish or bearish?
That's bullish.
Anybody not sure about that? Anybody want to challenge that?
That's bullish.
Everybody saying bullish? Nobody want to say bearish?
Okay, it say 0.045 cents, like it's just neutral, really. Like it's a neutral stand.
But no, that's the ratio. That's the ratio, right? Now that means that's what it's a what? It's sitting at about what, half? It's about a half ratio. Now, when you say that, you say it look neutral. I know you were saying, alluding to that, it says it's more of a neutral. Well, that means somebody else is 50% short.
Yeah.
Right, so that like you get ready to go half on the baby. Somebody come up half short. Like, hold up, bro. I brought, excuse my language here, but I brought the ovaries. You supposed to have brought the other stuff. This baby ain't gonna get made tonight, or you're just go home, bro.
So all this stuff here means something.
Of course it does.
Ratio, interest ratio. What is that?
So we just use this as a case study to say these are other layers that you can use to also read the ideal of a sentiment of a chart. Even if you don't even trade options, it's just another, I'll call them cheat codes that you can move around the market, find these other little tidbits of answers, or what they call little hidden gems, to not apply this to your due diligence to figure out whether or not you want to trade a stock or not. The greatest thing about this, guess what? This stuff takes every bit of a couple seconds to do this stuff. Now isn't the goal that you need to be convicted more than confused before you take a trade? Yeah. Isn't that what we're taught? We're taught to be you need to have more conviction before you pull that trigger than being confused. Imagine somebody run up in your house, the wrong house, a Breonna Taylor scenario, and that cop don't have proper conviction, proper procedure, proper training, and he just come up in there they're shooting, let loose. Now, what kind of foolishness is that? There's no coming back from that if they take you out. For some of us, I've seen people blow up accounts because they took a trade like that, buying their trade, and they didn't do the proper due diligence, and then they blew their accounts up, wiped them out. Opening naked short positions, which is an endless tab of loss that you can have if a stock short squeezes you. Game over. They come in to collect your house, your car, your firstborn. They come to get all that. So this rules to things that we're being programmed to realize, okay, hey, be patient. This is important, right? As you say, hint, hint, wink, wink, right? We said it a lot. Be patient. Know what you're dealing with before you jump out the window. It's just not worth it, because there's no what they call a time-sensitive perspective that tells you got to be in the market at any given time. That's the great thing about it. You come in whenever you want. It's an open door policy. It's a revolving door at that literally moves around the clock 24/7. If not one asset, another asset. Forex, crypto, right? Again, the option market shuts down at 4 o'clock. You got the 4:15 to trade the SPY or indexes like that. I mean, all these different things tells you whether or not, after that, futures market, right? Throughout the entire night, you can trade futures and just do the thing. You have unlimited access, but sometimes having too much access breeds bad behavior. Y'all have heard that saying before? Of course we have, right? We've experienced it at some point of our lives. We hit the gas pedal when we shouldn't hit the gas pedal, right? We slammed on the brakes when we probably shouldn't have slammed on the brakes. That's the ideal of dealing with all these different variables and consequences, or the opportunities thereof, or whatever. So again, cheat code. Another way is to look at the market and say, okay, what is the sentiment of the market saying about this stock individually? The put the call ratio adds a whole nother layer of potential conviction to your trade. Now, again, I traded this stock here in the earnings, Stone, right? Of course, I already came and did the recon, did the research, right? I saw people buying more calls than put. That don't necessarily mean that's the only reason I bought the stock in the earnings. There's more to it. You see what I'm saying? In that moment, you said, but wait, right? Y'all in that commercial OxyClean, but wait, there's more. What else did you have to perform before you take a trade?
What you say?
As they, there's technical analysis, there's fundamentals, right? There's what? Investor sentiment. This is just one layer in that onion, or on that onion, as I would say. One layer, right? So, of course, you want to be, again, cognizant of that. Take the proper procedure, take the, all the risks that are out there, you're trying to what? Dissolve them in a way where they make sense to you, dollars and cents, as we like to say. And then if you feel convicted about that trade after those things, you put that trade on, at least you feel good about your situation from that moment going forward. That's the least you can do. You're running a business. You're running an online business. You can either, again, put your merchandise up the street where you can't see it and hope to become a profitable business, or you can keep your products and your opportunity in focus where you can protect it, watch it, and also advertise in a way where you can draw business. Right? So again, these things matter from that perspective. Right, I'll get some feedback from somebody. I don't know. Anybody? Oh, is anybody? Okay, let me see. I think that overread. Let me hear. Yeah. So again, all those things matter in that moment. So this is why we tell people you got to be patient, even when you don't want to. You're running a business. You're trying to grow your experience. In this case, you're growing your money, right? All of it matters. All of it matters. Make sense? So going back to that scenario, right? We go back to the chart, right? Or we go back to the ideal of the chart in this perspective of the head and shoulders. We say to ourselves, okay, now that I know all that, look, ain't no need for me to try to jump out the window and go against that trend when the trend is telling me based upon the pattern. See, there's that trend and pattern coexistence again, right? Trends and patterns, right? There's no need for me to go against that. Let me plan for what? Plan for the inevitable, so to speak. That's that pullback. So you take the length of the top of that hair or at the head, right, to that of the shoulder, and then that should give you the potential move that you will get on the pullback once that pattern unfolds. Now, if that move is, let's just say we'll just draw, we'll just freehand it, right? If that move is based upon that move there from there to there, let's just say that's a move about 5 points. We'll just say 5 points. That's a 5-point move to the downside, right? Well, that's a lot of money in Apple. Why? Because if you inside of an option contract that just starting out from the weekly or even midweek, but the trend at that time, the market is showing a lot of volatility because again, stocks are moving more than they base a base case ATR because of volatility. Chances are you'll hit that 5-point move, potentially in a day or two. In some cases, sometimes it happens within an hour. If you got time on that contract, well, guess what? You got through 2 or 3 days, you just let the whole entire move unfold. But you get to pick and choose when you hit that cutoff valve. Whether you want to take your profit now or you want to take your profit later to see if you can get more out of it. Nonetheless, you got about a potential 5-point move that's coming from that head and shoulder pattern. Make sense? That's a part of also again, being patient, understanding the rules of engagement, operating underneath them, and letting the money work for you. As opposed to you sitting there, micromanaging it, babysitting it, working, getting fearful of it. They don't got to go through all that. No need to go through all that. You're running a business. As people say, you're running a business, right? Let it matter. Make sure it matters to you. It should matter to you. Right? It's only your money. As they say, it's only your money. And then some people say it's only money. I get it back. Well, then that means you came into this industry to backwards hustle. None of us came here to backwards hustle. I guarantee you that. I'm pretty much sure of that. Right? None of us came into this to backwards hustle. So that's the importance of those things. So going back really quick here. All right. Understanding the value of that pattern when you see it, you know what it is, prepare for it, get paid. Probability puts this at a 90 percentile or higher that is going to work out in that regard. 90 percentile. 90 plus is more than that, but we just say 90 just to be fair, right? 10% of error, right? 10% of crazy people just, or a binary event like a black swan event that may take that pattern and go elsewhere, right? Like what just happened the other day with what? The Federal Reserve scenario, talking the market back up after it was tanking. But the importance of this stuff, again, it's, man, what? It's priceless. Let's listen to the diagram, what they have here.
When a stock has been gaining in price over a period, being able to sell it at the right time means reaping maximum profit. The completion of a head and shoulders pattern is one indication that a rising stock may be reversing its course. The term head and shoulders refers to two smaller peaks in the stock price, which look like shoulders, with a larger price peak in the middle, the head. Analysts draw a so-called neckline from the first trough between the left shoulder and the head, and the second trough between the head and the right shoulder. The neckline is also called the support because it's the price at which recent sellers had been unwilling to go any lower. The stock of Brian's Bicycles develops a head and shoulders pattern. A dip below the neckline may indicate a reversal of the stock's upward trend, especially if the downward slope of the right shoulder is accompanied by a large volume of trades. So what's the best price to buy this stock at after a head and shoulder pattern has formed? Many investors take the distance between the top of the head and the neckline and subtract this amount from the neckline to identify a target price. While a head and shoulders pattern is a common tool for identifying the fall of a previously rising stock, an upside down pattern is sometimes used for the opposite reason. In this case, the price moving through the established neckline can indicate that a struggling stock is now gaining. The head and shoulders pattern is used in technical analysis, which is the analysis of chart patterns. Taking other measurements into account, such as long-term moving average, will provide added insight into the potential direction of the stock price.
How about that? Right? They say, how about that? And keep you saying, how about that? Right? Right? Cash me outside, right? Cash me outside. Then you want about that life? Cash me outside. How about that? Again, it's simple. It's very self-explanatory, and to the degree where, again, you could teach a kid how to do this stuff. Now, I'm trying to convince, my peers, which is you all, like, how are we not utilizing this stuff to our advantage, especially as experience has taught us a lot of things in life. How do we go against these, foreseeable, scenarios to do our own thing? Well, again, that will be because of what? We're not necessarily operating under the right rules of engagement. And so that's why, again, it goes back to the one thing. The prerequisite is what? Patience. Learning. Knowledge brings power. Power equals profit. Knowledge brings power. Power equals profit. You will never have consistent profit without what? Proper power. Power is what? Is the end result of what? Having proper knowledge. Power is no more than the ideal of what? You have good conviction. You know what the environment is telling you. You're reading the room properly. You're reading the charts properly. You're reading the fundamentals properly, right? From there, you have a level of conviction. That breeds that you have power. You have the ability to will things into existence now because you know what's happening. You cannot have that without having what? Proper knowledge. You can't skip knowledge and go straight to the profit. You can get lucky, but you will not be consistent. If you want to have a win ratio of 60% or better as an investor or trader, 70% or better as an investor trader, 80% as an investor trader, it ain't gonna come with you what? Flipping a coin every day and just buying a stock. It would just not, again, it would not happen. It would not come into fruition and where you have that level of what? Look, consistent like that. In this case, we tell people it's no rush. Get all the knowledge you can up front. So when you go to engage it, guess what? At least you feel good about your situation. You feel good about your money when you now stake a position, you know it's going to go work for you under all the things that you put in play. Right? That says something, guys. That says a lot. That says that you're serious about this what? About this opportunity. Because a lot of people just, again, they're waiting on you to what? Make very careless mistakes. Who are the people waiting on you to make careless mistakes? Market makers, other informed traders, right? Banks, whomever that's using big money. They're waiting for you to come in with your little $70 here, your 100 here, your 1,000 plus, your $2,000, whatever, right? Your $2. They'll take that too. It all adds up. Penny candy theory. It's the penny candy theory. Candy theory. 1 cent, 1 cent, 1 cent, 1 cent, 1 cent adds up throughout the day. Now, couple that with the idea that there's about 5.8, $5.9 trillion moved around the world every day in global transactions. A majority of that stuff is, within those stock movements and stuff like that, these different stocks. These big money people sitting around just consuming all that, all those indiscriminate traders just sucking up their little money into a vacuum. They're sucking it up. And then they count it all up. Oh man, we did good today. How much did we profit today? Over here in the options market, we profited 200 million. Over here in equity stocks, we profited. Okay, we did really good on the equity side today. We ended up profiting 1.6 billion. Okay, what do we do in the forex? Okay, in the forex, we did 200 million today. You see what I'm saying? What we do in the crypto space? Y'all do okay, yeah, we did pretty well on the crypto side, adding another 50 million here. Well, whose money did they take? Did they take the market money? Or did they take retail traders' money? They took retail traders' money. In order for someone to make money, someone has to lose money. Are you that trader that they're taking from all the time? If you are, I would say, first of all, woosah, right? Let's revamp that whole ideology. Let's burn some sage, right? Let's burn some sage, right? Light some candles up, put on some Peebo Bryson, whatever. Do what we got to do to get your mind right. And let's come back to the drawing board. Because this is not a gambling environment. And never will we begin to even hint to you that that's what this is about. We talk and move from a place of what? Knowledge. Knowledge brings power. Power equals profit. Patience is a virtue. The market ain't going nowhere. The market is not going nowhere. A stock may go through its moves up and down, whatever. But at the end of the day, there's many stocks going up and down. There's many stocks still at their starting block. There are many stocks that are at their pinnacle point. They're zenith. And now they just can't wait to come down. We make money going up. We make money coming down. See how that works? We need not have to fight, at least the ideal of whether or not, we missing out on something, right? Because, whatever our reason. Again, as the saying goes, FOMO, right? Fear of missing out. What are you missing out on? There's another one too called FOM, right? Y'all heard of that one before? FOLM. Y'all ever heard of FOM before? Right, I spoke about it before a couple of times, right? That's another one. Right? What is FOM, right? What is that acronym?
Fear of losing money.
There it is, right? A lot of jokers out there don't understand, right? Because when you have fear of losing money, what does that do? What does that do to your whole investment thesis or trading thesis? You're going to be fear of losing money basically boils down to one word and one word only, right? You skittish. Right? Y'all heard that before? That old school, you skittish, but every couple of things, you be jumping and looking around all the time, always just nervous and anxious and anxiety, right? Soon as that start to pulling back a little bit, you get nervous and hit what? The sell button.
I'm definitely guilty of that.
Say again?
I'm definitely guilty of that.
We all been there at one point in time. We all been there. Y'all already know by nature, and this ain't not a black and white thing because the market don't care about skin color and all that, but by default, y'all know black people are already skittish. Boy, look at him, look at him, bro. What's that sound? What they see? I seen that flashlight. By nature, we already on our P's and Q's, right? Now imagine you got some money you working with and you ain't got a whole lot. You already know how you finna feel about it, right? You be like, look, bro, look. Like one of my, my brothers in arms in this, my brother Stock God had that fear of losing money, but he did it from a place of what? As a technician. He was not finna take L's just because everybody else thought that, he should just sit and stay in a trade. He didn't play that radio when it came to that. He had a very, very tight disciplined game plan. If a stock didn't give him a proper setup, he was not going to take a trade. If the stock pulled back more than what he was thinking it should have because he mapped it out, he would get out that trade. Even if the stock bounced and went back up 2, 3, 6, 7, 8 points, do you think he cared? Did not. Why? Because he's not trading under the auspices of, if, woulda, shoulda, coulda. He's trading under what? A game plan, a thesis. Again, putting together what? 1 + 1. What did that equal? If he do everything right under this setup, under this rules, under this technical, under this fundamental, under this sentiment, if all those things checked out and gave him what they call an A+ setup, right? An A+ setup, then, the market got his attention. He has an entry mapped out. He has an exit mapped out. Again, if you get into a trade and don't even have an exit strategy mapped out, you already losing. Even in the event that you making money, you still losing. Because you'll have, again, as they say, diver's temptation. The fact that you don't have an exit, if it start going up, you start making money, you don't have a moment to kind of cut off the switch. And you'll ride a stock up into profit. And then before you know it, what happened? If it has any kind of stagnation at a point and begin to pull back down, and you don't pull the trigger and take profit up at near the top, right when it starts descending, right? Into those moments, you let it come all the way back down to where it came from. Actually go lower. Now you in the red. And the first thing you say to yourself when it go in the red, what's going to happen? What do most traders say when they start going to red after they made money? It's going to what? It's going to turn around. Right? It's going to bounce. Right? Right? It's going to catch a bid. Right? Y'all heard it all. Right? Heard it all before. Right? It's going to catch a bid. It's going to bounce, all this stuff. And what happened? Start to keep going low and low, low. Why? Because the move has already happened. The market already counted in for that small bump up. People took profit, and now everybody that's holding the stock now is what? Holding bags. It makes no sense to prove. I mean, and it's hard to do that. I get it. When you first starting out, man, human emotion kicks in. Joker be like, bro, man, this thing gonna bounce, bro. It got to bounce. The fact that you missed the opportunity to sell for profit is not so much that the market is doing something wrong. It's the fact that you wasn't necessarily mapping something out completely, right? We're missing out on some other layers of what? Of intel, as one would say, to make sure we're doing the right thing. The right thing is to what? You're here to make money. You're here to make money. That's the goal. You're here to make money, not prove that you can make money and then turn around and give it all back. Hardest thing for people to do sometimes, hit the buy button and hit that sell button. Hardest thing for people to do sometimes. I've been a victim of it before myself. I was a victim of that myself at one point. And I'll be up. I will momentum trade a stock, catch it on that first pullback, establish a new higher low, right? In that moment, and the buyers came back in and shot it up higher. And I'm sitting there like, okay, I did all the right thing. I'm up now. Okay, I'm up, 60%, 70%, 80%, 100, whatever. And then it gets to a point where I started to see it kind of tapering off again. It started with the buyer start leveling out. The level 2 start reading what? Less people on the on the bid, right? Then the people on the ask side is getting ready to try to get out. And I tell myself, okay, maybe the next wave may come in. All right, I'm gonna just see if it can go a little higher here. And it starts pulling back. I see the ask starting to stack up. The asks on the spread starting to stack up. The bids are becoming what? Anemic. There's less people on the bid. That means the stock is going to what? Follow down to find more people at the bid, because nobody want to pay for this stock at what? At the peak. No one wants to put a bid on the stock at its most expensive point when it just rose from what? 70 cents lower, $1 plus lower, $2 plus lower. Why would they want to buy at the top? Yet people do it all the time because they chasing fear of missing out. Right? There's so many different things that come into mind when you think about those things. We've seen it happen. We've been through them ourselves. But again, you have to be consistent in your daily mantras. The things that govern you before you get into any trade, they have to stand for something. You're running a business. Again, I repeat, y'all running an online business. If you don't have rules or creed, covenant, or whatever, then yeah, you just chancing it. It be no different than saying I think tomorrow it's gonna snow and it's blazing hot outside, 90 plus degrees in the state of Florida, and the first thing come out your mouth is it's gonna snow tomorrow. What would cause that, boy? Some insurmountable odds got to happen for that to happen, right? It's the same reality in the stock market for a lot of people. So they over time, the market will correct your behavior. Why? It's either gonna take all your money or it's gonna force you to what? Audible and change up your situation, because you're gonna get tired of losing, right? You're gonna get tired of being inconsistent. You're gonna get tired of seeing other people show up with making money, and you be like, man, why I ain't making none, man? It's messed up, bro. Right? No, there's rules to that. There's rules to this. There's rules to any business. There's rules to these things. If you follow them, at least under the aspect of what you know from a base case, then yeah, you should be able from there to add in, your little nuances. Again, as I say, find your own niche, but steal from everybody. Why wouldn't you? Like, why wouldn't you? This is the only industry where you get paid to cheat off somebody else's paper. I can give you a stock. I can map everything out and say, here, trade it just like this. Here's your entry. Here's your exit. When you get in here, buy it. When they get up near this area here, potentially sell it. Even if there's more money left on the table, don't worry about it. Sell it. Don't deviate from this. Go. You go do it. You make money. Guess what? Oh, I'm a trader now. I got this. The next day that person ain't around to give you a ticker symbol, then you got to figure out that thing again. What's going to happen? Oh, I got this, bro. I figured out. I seen what happened yesterday. As they say, it was all good just a week ago, though. That was yesterday, right? That was yesterday, not today. You're only as good as the previous trade that you made. And I'm speaking to the traders now, not the investor. The investor has a long thesis. You're only as good as the previous as the trade you made the previous day. That's a true Wall Street saying. Warren Buffett has to get up every day and put on his sneakers just like you. Lace them up, bro. Lace them up. All right. As we in the hood, they say strap up, family. Right. Whatever. You have to be like that I'm speaking to the traders now, not the long-term investors. In that instance, if you're going to be engaged in these markets from day-to-day perspective, you got to know those rules. If not, the market going to go in your pockets. The market going to go in your wallet. It's going to dig in your purse. Right. And that's not a good feeling. Trust me. Right. No one likes to lose, but that doesn't necessarily mean you can't lose. It's just that we understand how the markets work, especially if you get long-term thesis. Well, it ain't a loss to you sell. If a market's pulling back, that's fine. Ebb and flow, right? Ebb and flow, right? Hustle and flow, right? Right? We talk about this all the time. The importance of the what? That undeniable sine wave. You got to love it, guys. It's the waters of noon. It's the waters of noon, guys. Y'all look. All right, currency, energy. Let's go. Neutrality, right? When we hit neutrality, what are we talking about? That's just that stasis moment, that homeostasis point. In that moment, you got what? Peak, what? I call this peak, what? Peak party. Down here is what? Peak what? Right? Jail, whatever. You go to jail or something, right? You party too hard, stayed too long. And guess what? The cops came to break the party up. You still at the party. Everybody else is bailed on you. You wake up, hungover, drugs all in the place, this, that, and the third, and the cops show up. Guess what? You still at the party. Guess what? Somebody got to go to prison. That's what you be down here in the jail session. If you take, if you don't get out at the peak value, the peak aspect of the party. Well, guess what? If you can't time as that top, which most people can't, you still can get out this part of the party, or a little bit maybe at this party. If it get real crazy because you missed to get out lead the party at those times, at least you can get at the neutrality zone. Back where you came, when you started, right? It's like what they call breaking even, right? You get at it, break even, you win, neither no lose, but you just actually lost though, because why? You wasted your time, right? But it's okay. You still didn't take a monetary, L. Everything below that line, that means you just overstay your welcome. You just being very belligerent. You just being very careless. I mean, it's just, you name it, right? All the way down that until the cops show up and you still there and you go to jail. Man, them ain't my drugs, man. That ain't my drink, my booze. What you now you get to explain it now, like, bro, look, I'm a good Christian or something. I don't know, whatever. Look, bro, people ain't finna hear it. That's what the market makers doing. Market makers finna take you to jail. They finna take you to what they call financial jail. They finna take your money. Right? Or another trade, of course, in order for someone to make money, someone has to lose money. Somebody else banking off your your bad position, especially if you're a call holder and the market's starting to come down, put now that premium from the basic go to what? It's just dumping premium. You finna be dang near worthless to go to zero. They eating up all your premium. You started at 500, every tick down, they just take away another 100, right? Another 100, right? Another 100. Before you know it, you went under 100. Now you're sitting at like $30, or you started with 500, and they just sat there and took all your premium. It's not worth it. Have a threshold, have a stop loss, have a point where you're saying, okay, this is my this is my breaking point. You're running a business. Again, the goal is to make money, not lose money. The only way that happens if you have proper patience, right? Learning how to, again, read fear, price in fear, as one would say. It's all relative at the end of the day, right? So the mental conditioning, it is just that. It's mental conditioning. You have to, accept those things and then go out there and perform. Eventually it's going to what? It's going to make sense, guys. I guarantee it's going to make sense. I sat through this stuff so many times. I've seen people go on to just do crazy things in life because they came in the market, whatever, become phenomenal traders, write books, whatever. I know the guy, Andrew Aziz. I know him, right? I've been dying to get him on to do a lot. I'm supposed to do it. I told him one time we will set up an interview, and both of us got busy. But I'm going to actually have him come on. The guy that wrote How to Day Trade for a Living. Actually, I posted that in the group today to let us know about training. I'm gonna actually have him come on. And the guy wrote a book on this stuff. And I mean, he just now trade and travel the world. He'd be all up at, he'd be, up in the Alps, climbing some crazy mountain. The next day he'd be down in the coastal areas of South America, somewhere on the lower on the equator, spearfishing, some crazy. The guy just living their life, just trade, travel, wrote a book on this stuff. Again, great dude. Andrew is a great dude. But within that, again, it's about what people have experienced so they can better tell other people what not to do. That's what it's really all about. It's about what not to do so much, what to do, because everything what you need to do is somewhat already mapped out, because there's a lot of paper trails in terms of what you need to do, what you need to focus on: technical analysis, fundamentals, and investor sentiment. The three, right? The three-headed dragon. You get those three things down from at least a good understanding. No matter what stock you put in front of a person, they'll know exactly what to do with it. They'll know what to do with it. That's what we're all here trying to figure out. Day for day, moment for moment. When we have time to, to put in the intellectual investment in terms of our research, our study time, right? To be autodidact. That's what that entails that you have to do. You got to put in that chart time. You got to put in that fundamental analysis time. Eventually, this stuff gonna make sense, guys. It's gonna open up every little moment. The more you keep stress testing it, eventually it's gonna reveal its secrets. You're like, oh, okay, it stumped me before. Now I get it. I get it now. That's the best feeling in the world, right? It's like conquering a goal, right? The great thing about this, you get to put on, a position or opportunity within the trade, void of any other human experience, error, obstruction, whatever. And it's what? Again, it's you against the market. And there's no cap on what you can make. Those things that lure people into this, what makes people stay in this is what? Figuring out how to do those things consistent. That comes from what? Proper research, proper work, proper patience. All these different things that we talk about, proper due diligence and proper discipline. You get those things in play, you can what? You can make things happen. Make sense? Right? That's why we're here, guys. This is exactly why we're here. We're here to make these things, as they say, make it make sense, bro. Right? Make it make sense, bro. Make it make sense. That's what it's going to take for you to, again, make it make sense. Right? What's going on, family? Just looking at the YouTube side thing. What's going on, family? Dollar Wheel. What's going on, Over Divine? Brother the Snot Ball in the building. Brother P Smooth in the building. We see you guys on the YouTube following along. Hey, appreciate you guys, man. As always, just our little Thursday training sessions. Getting it in, of course. Sharing is caring, as they say. I'm over in the dark, right? I need to cut my lights on, right? But just, again, these are the rules of engagement, right? As we call it, the rules of engagement. So really quick here. So we're doing this, what they call the mental mindscape, that mental work, right? That mental work, right? Where is, hold up. Is it? Hold up, big scroll up. Oh,
quick one. FOMO and FUD is basically the same.
Well, FUD is fear, uncertainty, and doubt, right? Fear, uncertainty, and doubt. That's because that's more of a tug of war kind of a thesis or theory. Well, what is that? That means you have one side of people saying, hey, because of this scenario or these factors, this is why this market should be doing this. Other people say, well, bro, the market already baked that in because of this, that, and the third, right? It's that kind of jarring of who has the more stronger thesis. FOMO, and these are things that are either happening before the trade. Now, they could be happening during real time too, but these things typically happen before the trade, right? because people are trying to establish a bias, right? We're trying to say, well, hey, I think this is going to be the reason why this is going to happen, right? Some news might have came out on the stock, maybe even real time when the stock is being lively traded. And people just start going on barrage and saying, hey, this is why this stock finna what? Pull back. This is why it's going to sell off. If the broader market already has a strong sentiment in play for that stock and that news necessarily doesn't factor the ideal of it being a real big headwind in that moment, the stock might still keep going up. And then it'll literally get to 4 o'clock at the end of the day, and then guess what? Then it'll pull back, right? But in that moment, the momentum was already strong. Meaning, in the game of tug of war, as investor traders, it's like a tug of war, bulls and bears. If you pull them bears to your side, meaning there's more bullish people than bearish traders, meaning more buyer than sellers in that moment, they're gonna control the tape. All the other stuff will matter later, and if unless it has a lot of weight attached to it, as they say. What's going on, sister beautiful one in the building? We see you. Peace, power, poverty, evil. So that's the difference. So FOMO would just be just that. It's fear of missing out, meaning that stock is actually being traded. It's hot. It's pumping, right? And every time it goes a little higher, and you were thinking, I didn't get in at this point. Well, guess what? If it pulled back a little bit, I'm gonna get in on that next pullback. It comes to a pullback, and guess what happened? You still don't get in, right? It goes a little high. It's now starting to what? It's starting to bait you. Market makers see you coming in on the bid, like you put on the bid, say, I'm gonna buy it at this price. No one comes to what? To feel your price. Now you have to inch your price up a little high because the market maker is sitting there, what? Inching it 2-3 cents higher, 4 cents higher, 10 cents higher. Now it's up to like 20 some odd cents. That's a lot of money, especially if it's a cheap stock. Just imagine that 20 cents on $1, that's 20%. You miss out on 20% because you kind of got what? You had the deer in the headlight moment, but you still want to get in the trade. As soon as you get in, because you waited too long, now you chasing it. As soon as you buy in, the stock rolls over on you and just pulls back. Like that happened like a million times for a lot of people, right? When you first learn how to trade, you're like, God dang it, bro. I was ready to. I was sitting there ready, and the market just left me, right? Left without me. And you bought and you end up holding somebody else's bag because they selling at the top. Perceivable top, so to speak. Right. So those things are important, guys. That's why, we try to go over these different scenarios for a reason. Now, some of you guys, like I said, y'all probably at different levels of this. Some of you guys more advanced, some of you guys intermediate, some of you guys at at the introduction of this stuff. But the one thing above all, within any mindset of a trader, the one thing that you can never escape, I don't care how good you are, and that's the basics. And sometimes the basics keeps you It keeps you in check. It gives you perspective. It removes a lot of this warring going on in your head about the what ifs in the market. You dumb down the noise, you kill the noise, as one would say. You trade under some of the most basic rules of the market can offer you. And in that moment, guess what happened? In comes the bag. In comes the bag. In comes the opportunity. In comes the, the proper setup because you were patient. We're talking about that tonight. Again, patience is a virtue. Removing fear from the equation. That FUD, right? Fear, uncertainty, or doubt. Because your game plan is airtight, at least to the degree where you can account for it. If you can account for that, that potential movement.
Top layer of the scan ever.
Game on. Say again. Somebody say something. Oh, that just somebody open. It's game on, right? That's what this is about, right? You guys signed up for this, right? Trust me, y'all signed up for this. Don't y'all be trying to chicken out now, right? You guys signed up to be investors and traders. Don't you dare just jump out there willy-nilly, because you might have had a bad trade here and there. Again, you learn it, but again, a bird in hand beat one in the bush. In this case, the knowledge is it's the bird. Get the bird. Get that knowledge first before you just jump out there and test these different, tree limbs, the bushes, whatever. Get the knowledge, right? Because the market is not going anywhere. It is not, right? It is not, right? And so, being prepared is priceless in terms of what you can do. So we use an options market. We use the flow charts. We use, these different publications. We use these different screeners, scanners. We use all these different layers. Right? Again, peer-to-peer, right? We banging information off each other saying, hey, what do you think about this? What do you think about that? And a lot of this stuff has to come with you already did some prerequisite of what? Research first. You just can't come in cold turkey like, hey, what do you think about this? Did you do any research on that before you ask that question? If you have not, then guess what? That means you're not what? You're not all in on this moment. Meaning your interest level is not necessarily where it needs to be. If you have no base case understanding what's going on, do that proper research first, at least to the degree where you get stumped and you run into a brick wall. Then you come share that with the family. Hey, I did this level of research. I saw this. I read that. Blah, blah, blah. I'm stumped right here. Anybody got any information on that? Can y'all help me out a little bit? That's ownership. Meaning you're taking ownership of your moment in that moment to at least, feel convicted that you're making the right decision, or you're at least on the right path, right? You're on that right path of that potential aspect of a trade that you're going to take. Again, be it options, equity, Forex, crypto, it's the same reality. Some are more technical than others. Some are more fundamentals than others. Some of them nuanced between both. Some of them are strictly driven by what? Price action and price action alone. Or we know it affectionately known as what? Investor sentiment. Simple as that. Right? So really quick, I want to go through this real quick with you guys. So far, before I go into this next session, level, you guys good so far? Everybody in the building? Y'all good? Everybody great? Brother Dundre, Brother Rich, Brother Corey, over Chris, Iba Shanika, all you guys great. Iba Kiana in the building. Happy to have my sister in the building this evening too. Over Brandon, over Sean, all right, over Sonny, over David L. Are you guys good? Everybody good?
I'm good.
Yeah, I'm good.
Yeah. Over Brandon, over David L. Everybody good? Everybody solid?
Yeah, I'm with you.
All right, awesome. All right, so Shanika got that hand up. Here we go. Here we go. Cause I just saw Juggle there sleeping. I saw her sleeping in class. I was about to hit that horn, right? Old air horn like a truck. Yeah, wake up.
Flick them lights.
Yeah, bro.
I was like, oh my gosh.
Now, go ahead, Sister Shanika.
Your children did it for you.
That's all right. Yeah, I understand. You already know how we roll. We family. No, go ahead. What you about to ask a question?
Yes. So, could you give an example of getting in a trade at a certain number, getting out, with what you just said you've seen, and when that would be good to do that? And like just the simple steps, like, okay, so if I seen this at this number, this would have been good, and I would have went and did what? I would have XYZ, and then I would have, because my son traded today, and I gave him what I knew, but I'm learning a lot still, right? But it's the simple stuff, and that's the stuff that used to hold me up. Remember when I didn't know how to close a trade? I was in there, and I actually learned another.
No, it's all process. So exactly, we were just talking about that same thing. We were talking about what? A pattern, right?
A pattern.
Within a pattern, it's giving you an entry and an exit. I just mapped that all out with that head and shoulder pattern, and a lot of that has to come with like we always talk about, right? It comes with when you go through, let's say, at least enough of the, let's say, base case parameters, right? We just say base case parameter, right? So when it comes to an entry or exit, what are you really asking? You're asking from a what? A technical perspective, because that's a mechanical what? That's a mechanical perspective, right? It's a binary perspective, right? It's a what? A buy button and then it's a sell button. Make sense? I'm using base case parameter, right? That's a base case parameter. Now, everything that precedes that baseline perspective, what are those things? Right? Okay. Right? Those are what? The things we're talking about, right? That's the what? That's the technicals, right? That's the fundamentals, right? That's also read on the what? The investor sentiment, based upon what? Investor sentiment is also relegated to price action. Price action is no more than looking at what? The candles. Are they green? Are they orange? Are they red? Are they long candles? Are they short candles? Are they just a lot of doji's and small spinning tops, Marabouza, and inverted hammers, dragonfly doji, long leg, all these different little small little things. Again, nuances, right? Nuances of the market that we chase, at least to the degree where we try to figure out, okay, well, what's this telling me, right? So a lot of that has to come with understanding what those things are. It's more than just, okay, give me a buy signal, give me a sell signal. There's more to it than just that. Meaning, when you say that, okay, just give me an entry and an exit. Okay, well, what else did you have to account for before you took on the ideal of what an entry or exit signal will look like? You with me there? Does it make sense? You have to take the approach like, okay, well, this stock been moving, right? You may look at the chart and say, okay, it's been moving. Okay, where did it come from? Okay, where did it come from? Actually gives you the signal potential where it could go. Now, the key word in that is what? Potentially go. Now, if we're dealing in probabilities, because as an investor and a trader, you're dealing in what? You're dealing in probabilities, right? Everything in terms of a business, be it brick and mortar, it could be, it can be actually a brick and mortar, right? That's probability too, right? You got to have enough advertisement. You got to have good products. You got to have, at least a startup, a startup based, a reason why you're trying to go into business and this, that, third. So initial people might like your product at a place when you might have been doing online. Now you got a business, all this stuff, brick and mortar. I mean, all these different factors that goes into running that business. Inventory, the cost analysis, liability structure, stuff like that. It's the same reality. But the great thing about the markets, I always use that comparison, right? So I come from that space myself. The great thing about investing and trading, again, we talk about this stuff till we literally blue in the face. To get started here, you need some base case things. Again, base case, an apparatus to invest and trade through, right? Some knowledge, which is the first thing is knowledge. After that, capital, and then the connectivity, right? Of course, that comes along with the apparatus. So basically 3, but we just say 4. The one thing, again, is the knowledge, right? The knowledge is knowing what you're doing, right? It's probably knowledge, right? Know the ledge, know that ledge, right? Know that exactly how far you can go before you kind of like run into a wall, right? If a person comes to a chart and say, well, what's a good entry, right? What's a good potential good exit? If you look at this chart here, I use this with a guy the other day. I had a training session with another guy the other day. I'm gonna use that same one for a moment here. If I go to this chart right now, real quick here, let me hit this tab here. If I come to this chart right here, this is the chart on the video on the hourly, right? Instantly, you see I got these little yellow, salmon colored little lines there. Those lines right there represent what, we call it to be what? Guidelines, grid lines, kill box, whatever you want to call it, Pandora's box, happy place, whatever. In this moment, I'm mapping out what? Movement. In other way, when you say you're mapping out movement, that means you're mapping out essentially what? Money. Anytime you map out movement, you're mapping out money in the investment world. Why? Because each individual, pivot point, top or bottom, candle inside that movement is what? People buying and selling. When you first learn how to do proper technical analysis, the first thing they teach you is what? How to read what? Support and resistance, right? Support and resistance. When you think about resistance, what does resistance denotes? If the market is generated to what? To run to the upside, right? By default, the market's supposed to go up and to the right in 45-degree angle, right? So let's take that from a natural drawing here. If I was to draw that from a 45-degree angle, I know it's not going to be perfect, right? So I'll come from my 45-degree angle. Right now that's right there, probably just a little too. All right, let me just natural eyeball that in a way where I can get it up to that point. All right, and we just use it up to this point here. If the markets are designed to go up and to the right like that, on a given base of 45-degree angle, right? That 45-degree angle, right? What is that really denoting to me? That means that, okay, if the price, if the buyers are there, if any other ancillary issues are in place to make the stock, gain that kind of level of what insight, or people who want attractiveness to make people want to invest in it, that would also help, right? What is the ultimate path? What does it look like at this particular pinnacle point where I'm just starting at? What is the market, have done before that? That's why you look to the left. And afterwards, where do you think the market's going to go from there? Is it still more movement, to the upside in this perspective? Or is it a moment where it's going to probably hit a wall and kind of what? Simmer a little bit before making another move? A lot of different things you're asking, but these are base case things you have to learn from the beginning. The importance of technical analysis is literally what? As I say, mapping out money in real time. If those things escape you, that means, okay, if it's a little kind of like, it's troublesome at that point, step back. Do not trade with real money. Figure out what are these different moving parts before you jump out there, because everything on this chart is what? Is a signal. Even a candle is an indicator. Believe it or not, it's an indicator. What is it indicating? Buyers and sellers. Well, guess what? A candle can be red and still what? Can have upward movement. Like, how is that possible? Right? How can it be red and have upward movement? If it's red, that means it must have came down. Well, guess what? No stock opens up at the what? Exact what? Top. Sometimes it opens up in the middle point of a candle. Sometimes it opens up actually almost at the very base of the candle, shoots up, and then comes all the way back down and close below that opening price. We know that affectionately known as the what? The OHLC. What is the OHLC, guys? Say it with me, class. Say it with me, class. What is that OHLC?
Open high, low close.
Open high, low close.
That's your best friend as a trader.
Open what?
Now you know better. Now you've been at us. I done went over that like a million times when you've been on here Tuesday. You know, I'm finna get that boy. I'm finna get that boy. Look, I'm finna get that electrical little poke stick, a little prod stick. I'm finna poke. I went over this like a lot of times in the very beginning when you first started, Miss. And see, this is why I say retention is important. You trying to learn how to build a business. Look, that responsibility. You got to get them notes. You got to go back and recon this information. But I know sometimes you got, I say out of mind because you get busy. But this is the importance of you running your business. You got to know these things. These are what they call base case rules, right? Again, you jump on a bicycle and you ain't got no training wheels, what's gonna happen? You going in the ditch, right? I'm talking about flaming to the side, right? See, little kid trying to ride the bicycle without training wheel, boy, they be struggling. Boy. This thing, he be going, little Billy be going to the side, but he be trying to catch, he can't stay up. But this is the reality of that. So open, high, low, close just tell you what the money is doing in that moment in a particular candle. If you look at the top of my chart up here, at the very top here, you see it where it says OHLC, right? Every candle that you hover your mouse over or your crosshair indicator on a marker by is telling you what's going on in that stock at any given moment. Let's take this candle here just on GP. So we talked about it. And one of them, of course. And this red candle here, if I hover over that candle and take my hands off the screen, look, no hands, Mom, right? Look up there at the top where it says OHLC. What is the OHLC of this candle? What does it say? What is the OHLC for this candle that is hovering over right now? Right. Look up to the left, at the top of the chart. Look, read this, as they say, read the room. You got to learn how to read the room. If you want to, again, be really solid, you got to know what's going on with the chart at any given moment. These are base case things. Now, even if I never even worked with this platform before, I will search this entire thing up from an optics perspective, and I'll find that OHLC because I know what OHLC is, right? So saying OHLC, where do you see OHLC on this chart?
I see it all the way at the top of where it says January 26, 22, 14, 30, just before the 28, and you go straight up. There's an arrow down. Is that it? It's the
So when we say OHLC, so that means what? Open, high, low, close, right? So what was the open of this candle?
The top of it.
No, what's the price?
No.
We're talking about open, high, low, close. We're talking about numbers here.
Oh, let me see.
It's on the screen. You should just go straight to
235.
Open. What is the open? The open.
According to that candle.
It's on my screen. Look strict to my screen. All right. Somebody then drew on the screen. Somebody gave you a cheat. Somebody, but somebody bailing you out of prison right now, boy. You having the Jesse Smollett moment right now.
You did that. Help me, I can't.
But if you had the Jesse Smollett moment, they would have bailed you out of prison, boy. You might be doing 5 months right now. Look at him. Bailed you out, you still struggling. What that OHLC up there?
2020.
No, look at you see that circle on the screen, Miss Leno? Are you? No. You better stop playing. You must be valuable time here. They gonna throw some book bags at you the second. They're gonna hit you with a staple in a minute. They're gonna just stump the staple and hit you like they do in school. He didn't circle what you need to be looking for. Y'all, matter of fact, I'm gonna close my curtains here in my office. Y'all help out real quick. I'm gonna go on radio silent for a hot second. Y'all help out.
Somebody help me, please. Where's that? Oh, Brandon did it. Oh, open, high. Oh my gosh, I would never seen that. You know what? Y'all some bunch of meanies. Thank you.
Open high,
I
low
know it was
close.
Brandon.
That's what it is.
I know it had to be
Open
Brandon.
high, low
That
close.
help. Thank you, Brandon. Is open at 222, high at 230. I know that. Low at 219 and close at 228. All right, I know that. I wasn't connecting it with what he was asking me to do with the bar graph. That's like you can see that when on Robinhood, like when you scroll down, that's like the information for the day, right? Where it opened at, the highest it hit, the lowest it went, and at the end of the day, what it closed at, right?
Yeah, that determines to which candle. So if he hovers on a certain candle, it'll give you the OHLC.
One candle will give you that.
Well, it depends if he's going on a daily. So if he goes on a daily, it'll determine whether if it's for that day or a different day.
Okay. When it just when would be most best to use that information? Like if it's just open at 9:30 for the day, and I'm seeing when it opened, I'm seeing an OHLC. How could I use that to my avail personally to decide the rest of that trade with that candle? I mean with that stock.
Come on now, you're supposed to be telling me this.
Okay, so you don't get me started. Okay.
No, I'm just saying, like, think about it though. Like,
look, you asked for it.
never mind. Let me just tell you. Let me just tell you. No, let me stop playing. Let me just stop.
Oh,
no, go ahead. Tell me. Go ahead. Tell me. 'Cause this is how you're gonna learn.
Okay, so if it opened at 267, and I could the candle that I hit over with show that I'm looking at that candle to see over to the side where that 267 mark would be.
All right, so I'm sorry, right quick, where he has it, the cursor on right now, that represents 1 day of trading.
Okay.
So what was the open for that day? Look at the screen right quick, and what was the open for that day? Where did it start off at?
My bad. Oh, Brent, this is the hourly chart. This is the hourly chart.
Oh, it's the hourly chart. Okay.
This is the hourly. My bad.
Okay.
So
yeah. Go ahead. You got it.
Okay.
I'm gonna go on mute. I'm gonna let what they call participation. Help out class.
Open.
So he said this is the daily. This is the hourly. I'm sorry. So for that particular hour, on the OHLC, what was the low?
All right. I don't know how to find it. So I'm just gonna say that the lowest is that marker right there.
No, ain't no guessing. It's right there. What I just circled.
So the one thing we've been talking about, Sister, very, very, very thorough here. These are binary events because they've already happened. There's no guessing in this. That's why I've been telling you this for a while. And in moments where you have what you kind of binary readout, there should be no guesstimation here. There should be a very quick look. Okay, I see it here. I know where to go look at it. From there, I can make a good informed decision, because meaning this is money that's already been made, right? Or collected at this point. This is what they call looking to the past, right? You already know what happened then. Okay, I remember this. I remember that. Well, there's a track record, right? There's a frame of work, a frame of reference, as one would say, right? Frame of reference. So anytime you look at a candle, now be it an hourly, 5 minute, 10 minute, 15, 30, 4 hour, whatever, right? That's telling you what all happened within that moment of what money movement, right? On the hourly chart right here, in this case, when we say look at the OHLC, the first thing you do when you do a search on this chart from an optics perspective, you go find anything on chart that has an OHLC readout on it. If you're not familiar with out the gate, that's fine. And we point to it, we say, well, here it is right here, right? Well, because I think Oprah Brandon circled it earlier, right? I'll just do it again right here, just on GP here. All right. The OHLC is on Trading View is up the very top. There you go. So you put it up there again, right? So that means everything inside of that candle in that moment, wherever that chart, where the crosshairs on my chart where I'm hovering over a candle is reading to you for every hour. That's what that candle did. In that hour, it did that much work. This little candle here, it did that much work. This candle here, it did that much work. On this candle way over here, it did that much work. Those are binary events, no guessing. Why? Because it's already been recorded. You know, it's already, or they say it's history at this point. Yes, the best way to say it. It's already history. But using this calendar here as a case study real quick, just on GP was using for GP. If I ask you like, hey, what did that candle open up at? What did NVIDIA open up at? During that time frame, that hour worth of trading in NVIDIA, what did NVIDIA open up at in the hourly candle? And you would say, Miss Leno,
It opened at 237.
They opened at what?
237.
Are you sure about that?
No, but I see it.
How you not sure? We just talked about it's a binary event. It's a binary event. How you not sure?
Because I'm looking at it and the line goes through just
no, you're looking at the line. Go look at the OHLC at the top that we have circled. You're working hard. You're working hard, not smart.
Yeah, here. The open is at 237. But I'm trying
to
match.
No, hold up. Don't but. Ain't no but to this. That's a binary event. That's recorded in history. You can't pick what it's gonna be after that, because if it's recorded that it opened at that price, guess what? That's what they're gonna look like on your Robinhood, on E-Trade. It's gonna look like that on Webull. It's gonna look like that on everybody, because it's recorded. It's history. It's a print, right? They call it the tape, right? That's what the tape say. What the tape say? The tape say did. So if I ask you what did NVIDIA open up at that hourly worth of trading on NVIDIA, you go to that OHLC and you say, well, it opened up at what price again?
237.
Are you sure about that?
Yes, I just want to know why that ball.
You're supposed to say it with your chest, right? I say it with the chest, right? Are you sure about that?
I'm absolutely sure about that. But why that bar look like that then? Why does that line cross?
So let me ask you a question. You just say you're sure about that. Now I'm going to test that. How many people here say it opened up at 237? Anybody else want to test that? Anybody want to challenge that? Anybody want to challenge that or test that?
37.76.
Say that again, Oba.
Count the cents.
You done left a whole 76 cents on the show. I'ma love doing business with you. I'ma overcharge you. I'ma go in your socks. I'ma go all in your little cookie jar you got on the top of the. I'm gonna get all them pennies. I'ma love doing business with you. You leaving all that money on the table. I told you it's a binary event. This is not guesstimation. This is not throw it in the wind and see which way the wind blows. This is you dealing with money. And we talking about millions and millions of money, right? Billions of dollars. 76 cents is a lot of money. So you want to get trained in what? Accepting what you see and acting on it in a way where you account for every aspect of that moment. Why? Because you asked the initial question, right? How do you determine entry and exit? If I say, well, on the hourly calendar here, this thing opened up at 237.76, really 237.77, given that 9.5, right? On the back end of that, right? It opened up at 237.76. And then this whole entire OHLC, it had a high of what? What was the high price? I'm asking. What is the high price?
238.56, really.
Right? What was the low price?
The low price is 222.97. So
you finna tell me from the high to the low, what's the differential in that movement there? 238.55 minus 222.97. What's that?
The difference between the
high and the low. Somebody give me some quick calculation there. Somebody pull out your calculator if you need here. What's the difference between 238.55 minus 222.97? What's that number?
$6, right? Just about $6.
Subtraction. You doing 238 from 222? You say 6. I'm a little doing business with you, Miss.
Yeah.
Give me your debit card. Give me your credit card. Give me your wallet. Just go and get it to me.
$16.
Send it every 9. Send it right on to my house. Thank you.
It's $16.
It's just $16.
It's $16 and change.
See, this is why I take this serious, because why? You dealing with money, honey.
No,
if you're gonna be that generous to leave money on the table, guess what Wall Street gonna do? They're gonna politely take it every single time. And if you go to the market and say, well, I don't know why y'all doing this to me, they're gonna tell you, what do you mean you don't know what this is? This is numbers, this is math, this is this is the tape. This is the exact value of what's happening in this moment, after the fact. Of course, this is after the fact, because when it's happening in real time, it's not an exact science. But leading up, after it has done, when it has been recorded history, that means that candle open and close at a certain level. It had a high at a certain level and a low at a certain level. So in that moment, it hit a high of what, 238.55. It had a low of 222.97. Now I asked you, what's the differential between the top and the bottom? What's that differential? Give me an exact science on that, because that's exact math. Pull out your calculator, do that 2 seconds. You should have that answer right away. Why? Because time is money. If you're trading the market in real time and you're trying to find the entry and the exit, the market not going to sit there and wait on you to do what? Long math. They're not going to sit there and wait on you to kind of figure it out. The stock just going to kill it. Keep moving. It's going to leave without you. So this is all the rules that we're trying to what? Account for. If we're going to gauge the market in real time, you got to know these things, even if you're trading options. Now, you don't have to time the exact top of the top bottom again. You may have a little, what they call window of opportunity. You may say, well, okay, I give even if I don't get in at this particular entry price, I give it a 30 cent buffer, a 40 cent buffer. Make sense?
15.58. Yes, it does. 15.58.
It's 15.58. That what you got?
7.
It's in the exact science. Are you sure about that?
Yes, I am.
You ran it through your calculator, or you did it on your paper?
I did that on paper.
You run it through your calculator real quick too. Yeah, you ain't finna get away with this. Not tonight. You ain't finna do it. Not tonight. Not tonight. I'm not gonna be all night, and I gotta eat. I gotta get up in the morning. It's been a long day. I've been training all day too with sessions. Not tonight. But to get that calculator out and give me that raw number. You ask, you gotta go put in the work. Meet me halfway. That's all I ask. Meet me halfway. What's that math?
This actually makes more sense than what the other thing was doing, with where that was going, because that didn't make no sense. This does.
Give me that math. Somebody give me that math. But it was 238.55 from 222.97. What do you get?
All right, sorry. 238.55 minus 222.
97.
Yeah, 15.578.
You say 15.
15.578. 15.57. But rounded
Right,
up.
you said 578. I'm like, hold up, wait. You gave me some integers there that's beyond, them 5 digits there. Again, now you see the importance of exact science. You're dealing with money here. Why would you leave that money on the table, right? Or, not account for it, because that's what you're trying to do when you're trying to get into a stock, is it not? You're trying to account for what? For some money, or at least the potential of what that could be. Granted, you catch that trade, somewhat, as they say, just right. That stuff matters. And you're talking about stocks that are moving like an equalizer sometimes, because the price action may be very prolific. It ain't sitting there waiting for you to figure out what you want to do.
Not at all.
Right? That market is moving. You got people from Texas, Timbuktu to Tier 1 of China somewhere trading out markets right along with everybody else. They trying to get in where they fit in like everybody else. Ain't nobody finna stop and say, let's wait on Miss Leno. She can get in yet. Wait on it, everybody. Everybody sitting there they scratch their head like, man, this joker don't make that position, but I'm finna go crazy, but right, they're gonna see you, they're gonna send a virus to your computer. They're gonna fix you. That's important to knowing what you know before you jump out the window. You gotta know what's going on in all times.
You just changed the positions of the old.
No, I did. It's right. It's still on it. It's still on it. Don't try it. Not today, Miss Leno. Not today. If you want to be proficient at this, you got to know these things. You can't jump out the window and take the willy-nilly approach. That's not good. Those are not good habits. Why? Because in doing so, you stress testing your learning curve, you stress testing your pockets, and you stress testing your as I like to say, your interest to be phenomenal in this. It'll kill your drive if you continuously feel like you got to struggle. And not saying that you're going through a lot of it in that perspective, but I know this from experience. I've seen traders come in, and a lot of these things are, like I say, those things are binary, right? Because again, we talking about, after the fact, we're doing like a reconnaissance. I don't want y'all struggling with this stuff, at least at this perspective of it. The only thing you're struggling with once you get all these basics down, learning what technical analysis really means, fundamentals really mean, understanding how to read price action properly and all those things, the nuances of all those things that fall underneath technical analysis, right? Candlesticks, charting, patterns, indicators, oscillators, right? the price action, reading the price action, understanding again support, resistance, pivot points. That's just a base case shell of what technical analysis means. The nuances come when you go a little step further with your studies and realize all the other little intricate parts that give you what signals of how to read a start, right? So right now it's weird too, because I added all these things on my chart, right? And I got the I have the 200-day moving average up here. Do I have the 20 up? I got to put the 20 up. I got the Bollinger Bands up, everything. Now, whether you know what the Bollinger Band is or you don't, but one thing you would say to yourself, okay, just looking at this thing from a natural optics perspective, in that same area I was just speaking about there, I'm going to show you how your eyes don't lie to you. Even though when you try to get them to lie for you, they're not. If I say that candle that we talked about here, this guy right here, this white candle right here, right? I'm make it white. If you looked at the guidelines within the Bollinger Bands, right? Or whether you know what Bollinger Bands is or not, I'm going to draw a prerequisite understanding. That area that's lining up on the chart, vertical, 100% vertical. Even when you see I got a channel break candle at, right? That's a channel break indicator. Lets you know there's going to be a channel break momentum change. That candle right here, right? The top of that green line up there, that's the top of the Bollinger Band. Now, initially, we're talking about support resistance, right? If you look over to the left where I have written on the screen here, where it says resistance, clearly that's going to be what? A resistance level, or would that be a support level?
Support is when it hits the bottom, and then there's the momentum for it to go back up.
So at the point where I have those two cotton candy colored little arrows, is that a resistance level or is that a support level?
Oh, that's resistance.
Right. Trust what you see. Your eyes not lying to you. If you have to question that, that means what? Your mind ain't really accepting what the reality of what you've been taught, or what you're learning, or what you're reading, or what you're researching, because it's telling you it's a binary readout for the most part. There's still probability, but just natural optics, that's telling you that's a resistance level. Couple that with the indicator, in this case, we're using the Bollinger Bands. Again, that little green line that I had those arrows pointing to, right? That means at the top of that Bollinger Band area there is naturally known as what? Resistance. And if it's a resistance, that means you can't what? It's resisting. Resisting doing what? Trying to go up. Technically, it's going to do what? Most out of 10, 9 out of 10 times, it's going to do what? Is it going to go higher from there, or is it going to pull back?
It's going to pull back.
That because it couldn't break that resistance, right? Hence, the color of that candle is what color?
Red.
Now, like I said earlier, even with red candles, there's also what? Some upward movement. You can make money long in a red candle. Is that confusing?
No, because it's the way that it's the indication of on that red candle, whether it was closed, open, the middle, representing like.
Okay, we just talked about that. You getting a crash course on OHLC. Go to the OHLC. What does that OHLC again says? It says what? Let me go back, hover over it so we get it. What is OHLC again? What was open?
237.76.
And the high, it had a high of what?
A high of it's crazy small, 238.50.
So that means that's almost a whole dollar that it had going to the upside before it hit what? Resistance and fell back. Make sense?
Yeah.
So that means if somebody had an entry at the opening of that candle, when it opened up at 237, let's say they had a limit order set for 237.80. They got filled at 237.80 because the stock started trying to what? Trying to go up, right? It went up and hit a high of 238.55 and it started trailing off a little bit. And they probably said, you know what? This thing looks like it's trying to hit resistance. Why? Because I see what? My Bollinger Band puts it right up, kind of at a point where it's still showing resistance. And the previous candle beside it shows me what? I see it what? Neck to neck right there where it hit resistance there as well, right? At that point, which is actually sitting at around about what? 237.70, even though the wick showed that it went a little higher. Those are areas that you can now look at this stock and say, those are points of what? Resistance. If it's trying to go higher after now starting to what? show weakness after having a candle that preceded it, that touched resistance here at the top here, is pulling back. So in order for the stock to go higher and reclaim that resistance again, number one, a couple things going to have to happen. The bull's going to have to really bring it, right? Obviously. And then number two, it's going to have to try to hold at or around that previous candle entire movement. The entire movement of that previous candle here from here to here is your guideline to establish your what? Any entry to try to retest that particular high. Anything outside of that, it's going to be what? Game over. So I would say from this perspective, that's your window of opportunity to establish your what? Entry into this stock. Now, the bad thing about it, it opened up at 237. That's easy to see because as soon as you buy a stock, again, what's going to be recorded in that moment, be it a minute chart, 5-minute chart, hourly chart, it's going to show up on your Robinhood, your Webull, your Trading View, your Tastyworks, your trade, whatever you're using, it's being recorded because that's an entry price into this stock, meaning that's what the tape opened that stock up at that particular moment. You have to ask yourself, what is the sentiment of this candle? What is the sentiment of the move that's going to potentially come next? Well, you can't read the future, right? I beg to disagree. I beg to disagree because if you work under the rules of engagement, you already know the sentiment now at a point where you just hit resistance gives you probability that this stock may obviously be a little bit more weaker than it's presenting to be in terms of potentially going higher. And you just came from a nice move from a bottom here and ran to the top. And from going from the bottom to the top, right? Started from the bottom, now we're here, right? You'll be saying that something in your head, like, yeah, but now you at the top. Where can you go at this moment? You can go higher, but guess what? Somebody got to open up more opportunity for you to do that. If you're running into a point where you have now indicators telling you, whoa, you finna hit a point of resistance. If you don't break above that, the next move is potentially going to be what? If you can't go higher, then the next potential move going to mean you finna go what?
Lower.
Not rocket science. Don't stress test that. You're not going to stress test the idea of that, knowing those rules now are fashioning itself the way to tell you that, okay, well, we finna probably pull back a little bit. Why? Because we already made a great move previous to that. And the stock is just kind of now a little extended possibly, or it might be overbought if you have an RSI. Even the RSI might be saying it may not. Either way, it's mapping out money that already preceded it. Why? Because if you look further to the left, you see the stock came from what? It came from here. It came from the previous day. It came from here. It already had made a big move from a support point. Now it's at the peak point of that. Well, how do we know that's a peak point? Again, you look to the left again and you establish what are some areas of resistance that it came from before. If I look right here, right, let me change the color. If I'm looking at that point there as a point of resistance, not only do I see the Bollinger Bands topping out there, I look immediately to the left of that and I see other areas there where the stock had some stoppage a little bit. It kind of hit the brakes at around that point there. This candle and that candle and this candle and that candle. That's also a natural resistance points that are telling you, oh, okay, that's why that area is becoming hard for that stock to break above that. Bulls got tired for that moment. Okay, they took some profit. The stock is pulling back. Now it can pull back a little bit, retrace, and go back up. It can pull back a lot. That's the part where, again, you can't necessarily map that entire idea where how far it can go and go down, but you can get a semblance of what it may look like. Again, basing that on, looking to the left, the previous candles where it came from, and tell yourself, okay, well, guess what? That entire move here from here to the top here is the first window of opportunity I now get to map this money from. That means those are honest buyers and sellers in that entire movement. If nothing else, I can account for that. If the top of that candle, in this case, it hit a high of 238, 76, whatever. That means it has the propensity to pull all the way back. It has the propensity to all the way back to where the market opened up at in the very beginning of that day. And that's around about, again, give or take, I might be off a little bit here, around about 230 bucks. That's an 8-point differential from top to bottom. 8 points. You know what that is on a 99% delta or 100% delta? That's $800 in 1 hour worth of trading. if you bought the top in the contract, let's say our option, if you're trading option, if you bought the top of that around 238 and the stock fell all the way down to 230 in 1 hour worth of trade, because this is an hourly candles, hourly chart. If you had 100% delta, that's for every $1 move, that means you made $100. It's knowing all those different things, how they work in unison, that will help you become more solid in what? Mapping out money, or at least the potential of money. Because again, if you're going to figure out what a good entry is or a good exit, guess what I just did right there in that whole conversation I did with you, Miss Leno? We mapped out exactly the question you asked. How do I determine what? A good what? Entry and a potential and a what? And a what? Exit. Did any of that sound foreign to you? I know you're still learning, but no. I'm a slow walk you through this stuff. We cooking gravy. You don't just burn the gravy. This ain't just, you don't just burn the curry and then don't add no water to it. You finna burn the curry and they finna come for you, especially them Jamaican. Well, you burn the curry and you burnt it too much. You burn just a little bit to get the aromatics going. But after that, you burn that curry, but they finna hit you with them butchers, not them with the machetes. They're gonna cut some meat off you. This is how you map that money. Now you have to see this over and 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 over again before it resonates with you. Why? Oh, it is. You don't wake up tomorrow and become a millionaire in this. You can get lucky, but you won't be consistent. You can make $1 million one day and give it all back the next day. Tell me you won't. I can show you 1 million people that have.
Oh, sad.
Because you could be lucky, but you will never be consistent, because you won't know what to do faced with what? Different obstacles, different viewpoint, different set of rules. I mean, in this case, the rules are just fundamentals that's changing, or the price action. You got to know these things. It's important. Look, it's like, again, I
understand you. I understand you. It could change.
And the rate of change, right?
Looking at. Yeah.
So it takes practice. It's the point of that. Again, I go back to you being Allen Iverson. You showing up at the press conference on some practice. Yeah, practice. Yeah, practice, Allen Iverson. You got to show up to practice. I don't care if you're the superstar. You still got to show up to practice. Why? Because other people may need what? Your guidance, your skill. They need to play with you to see how you dribble sometimes to the left as opposed to crossing over going to the right. If you coming in the game like they better catch on as they go along. Are you a team player?
No.
Now, clearly, this is not a team player sport because you're doing this by yourself. Granted, but guess what? Guess what's on your team? Them candles, that Bollinger Band, that volume bar, that RSI, that VWAP.
Wait, what? The Bollinger Band.
In short, what are all those things? They are what? Indications, cheat codes. If you bucking those cheat codes, your teammates, you finna take a L.
You said Bollinger Band resistance.
That's just those are just indicators. That's no respect the person. Meaning you can use Bollinger Band, moving average, Helsinki cloud, whatever indication you use to map your money. You got to know what they're there for.
Okay, is it okay? So those are the simple things that I don't think they're so simple. You don't learn that. Like I didn't learn that from just looking and watching what was going on with the.
So know why? Because you at an introduction level. You're trying to put the cart before the horse. You will never be great at this if you try to put a cart before the horse. Imagine putting a cart in front of the horse, and the horse trying to push it with his head as opposed to what? Pull it with his what? His legs.
With his legs.
Good luck. He gonna get a headache first, but the first little couple of he like, bro, I give up. I'm out of here. He gonna cut to the hard left, and you gonna see that horse ever again. He gonna go right back to the wild. He's a man bumping domestication stuff. This joker got me working hard.
You saying, but you saying that you use the open entry number.
I use a lot of different things. And of course, the thing with you is I want you to be very patient and learn everything you need to know about technical analysis. Every time we go over this stuff, we basically tell you, hey, pay attention to this. When we get off a training session, you're supposed to go straight to Investopedia. We give you this stuff. We don't even say you got the information. We gave you books, PDFs. You got all this stuff. You're supposed to go back and what? Cross compare stuff. Just like being in college and school. If I say, here's the assignment, I gave you everything to go research. You went home and played hopscotch, fireball, got on the phone.
No, I didn't.
You did no home.
No.
You should next day and be like, well, how I got a 70? I mean, 37. Everybody got 90s. Well, did you follow the instructions, Miss Lewis? But no, I thought it was just as much easy as just okay. What there lies. That's why you 30 percentile. Everybody said 70, 80, 90 percentile. You shooting in what? You shooting in the dark. Everybody's gonna cut the lights on. Everybody's put on goggles. Everybody's what? Fine tune a scope. Who's that, man? I don't need all that. I'm just gonna just shoot.
No, I'm trying to make sure that I got you straight. I promise you.
I'm taking you back to the basics. You need to become proficient in technical analysis.
Yes, I'm okay.
Because everything inside of technical analysis just explains everything I just sat there and mapped out to you in terms of an entry and an exit. Everything. Okay. If you skip that and just try to say I don't need that, I'm just gonna try to free will of this. What's gonna happen?
I'm not gonna make a trade or be consistent with my trading. And
so I'm gonna ask everybody in the group. Obashan, what's gonna happen to her if she don't figure out how to do proper technical analysis? If you're able to talk, what's gonna happen to her, Obashan?
Yeah, that bus will run you over. You definitely you don't want to chase the train or chase the bus. You want to map it out and let it come to you. So,
back tires from the guard across your back, so Sneaker. I'm talking bloop. That bus gonna come all across your back with them back double tires like a dually truck all around you. Over Rich. Where you at, Over Rich?
Yes, sir.
What's gonna happen to her if she don't understand those things?
Lose some money.
I did.
Wallet finna go straight. Tell me go straight. Go bye-bye. Go bye-bye. Go night-night. Go night.
I've been there, done that.
And okay.
You can't skip it. Every time you try to pop in off Over Brandon. Where you at, Over Brandon? Over Brandon, you there? What's gonna happen to Over Brandon if she don't follow these rules and learn this stuff?
You're gonna blow your account. You're gonna
go straight to zero.
You're gonna fall in a gambling state that you always win. Oh, okay, I need to win. I need to find a way to win. You might get lucky on one, and then you're gonna try it again. Blow that money too.
I'm not trying to do that.
I'm finna cut Obadundre. You there, Obadundre? Obadundre. Call her Paige and Obadundre. I don't know if you're able to talk right now. What's gonna happen to her, Obadundre, if she jump out there?
She's gonna blow that account up. The account's gonna look sweet and it's gonna go to zero.
Straight to zero.
I'm trying not to do that.
No collect $200. Ain't no monopoly. You finna just jump in there, take over the bank. Over Chris, you in the building? I don't know if you're able to talk now. Over Chris, Paige or Over Chris. Over Chris. You know I'm finna get you now. Over Chris finna get you.
Don't get no margin.
Open his mic up. He gonna get you. Right?
I said don't get no margin account.
Right? Over Corey, you there? Over Corey, are you building in the building? What's gonna happen if you jump out there and don't understand the importance of going over this stuff over and over and over and over and again? What's gonna happen to her?
End up wasting your time, wasting money, and you lose your faith in stuff that you're practicing.
Very important. You got to know that because this is a repetitive sport. That's why I always tell people, what is our mantra, guys? Repetition becomes what? Repertoire. How long did it took you to be good at what you do for a living? You didn't wake up overnight and go, I got this down to a science. No, it took time. You had to learn how to read those signs. As they say in the proverbial Chinese, they say what? You got to read the tea leaves. The Japanese, you got to read them tea leaves. Right? You do that hoodoo or that juju, but you drop them stones the wrong way and you give a bad read, and Joker take that read and go out there and get mopped up. Don't do it. They're gonna go right back to your house if they survive. They're gonna come right back to you, boy. They're gonna ask some questions. Don't do it. So this is a game of fine wine. You slow walk. The questions that you asking, a majority of them could be answered by what? Simple research methodology. If I put you in front of the Dagger Squad right now, and they say, what's your primary source? They're gonna say source, but shut up. And I put you in front of them dudes right now, what's gonna happen? But you're gonna cut that computer off, put it on the plug out, everything, boy, they're gonna beat the brakes off you. Especially Unc get on there. You know Unc it's gonna be lights out. They're gonna beat the brakes off, and they're gonna be mean about it, because they don't even be caring sometimes. They just get mean with it. You supposed to know this stuff. You supposed to know this. Well, that's the importance. This is important because this is your money on the line. It's not so much just bragging rights of information. This is your money. What's most important?
I'm very anal. So when you
So
gave me
if
the
you
example,
anal, then
I'm
how you
trying
gonna
to.
skip the research then and then make these kind of assertions and probabilities without doing the proper research? That's even worse.
No, I didn't.
No,
That's what
hold
I'm
up.
saying.
You even say no because look, everybody in that group then seen and then look.
All right. I
We
had a
ain't put
day.
you on
I'm
the spot,
sorry.
but we're gonna put you on the spot for a hot second. They saw, they didn't
I'm
saw,
sorry.
and they didn't see. And you ain't
I
finna
had
escape that. You can't
all
escape
right.
it. That's why I say because a trade is a binary track record and what you did or did not do. Now, if I go to that group and pull them trades that you did, I ain't gonna put you on. Don't make me go to exhibit A.
No, those
Don't
trades
make me do it.
I was smoother. I was
Don't
smoother than
make
a
me do it.
I was
So you
smoother
best,
than a
hey, as they say, you best back out very quietly. You ever see that little meme where Joker just back into the woods very quietly? You need to do that right now. Back away very quietly here, right?
Yes,
Homer
yes.
Simpson style. It
Yes,
ain't
yes.
worth it. But
I'm trying to get what you said with the open. You said the open number and the
that's just
high
one of
number.
many factors. That's an open, high, low, close, tell you what's happening in real time in that moment in that candle.
And when you
That's
did
all
it,
it's doing.
you use the numbers how against each other, because that made sense. When you asked me to look, that candle still had some space in the top where it crossed on the graph. So that's why it didn't make sense to me. But then when you said it got a few cents left, and therefore that's almost $1, then that made sense why I was looking at it and trying to figure out why doesn't I hit it at the top to show the 230.
But see, when you question it as if it was not a binary event. That's what I'm telling you, trust what you see. But number one, you got to know what you're seeing. See, if you struggle in terms of what it is that it's trying to tell you, then everything from that point on going to confuse you.
Right. No. Okay. So
it's going to confuse you, because if I ask you again, whether you knew exactly what OHLC means or not, of course, it's a learning experience. You get it. Now you understand it. You've seen it before. You just didn't understand the importance of it. Now, then you turn around and say after that, okay, what is a good entry? You're going to know exactly what happened that preceded that stock to give you the idea of what a favorable entry would look like. Why? Because if it has a resistance or support, from everything from that point on gives you what? A guideline. That's what we talk about, support resistance being guidelines. That's what they're there for. It's either what? Supply zone or demand zone. Meaning you got product or you don't, right? You can't make a promise to sell somebody something you ain't got product to offer, right? That's bad business. The market is kind of doing that the same way to a lot of traders, right? They'll come in and say, okay, well, it opened up in this little circle right here, right? This is the area we're talking about here, right? Well, that right there. If you say, well, what's a good entry? Well, it opened up actually what? On the day, right? At this little candle right here, the little green one here. The market opened up on the day at what? 232.36. It had a low within that candle at 227.96. That's the difference of what? That's the difference of around about near what? 4 or 5 points out the gate, right? So now you say, if you hit a low of 227.96, the first thing you say to yourself going forward, right, really quickly is what? From everything from that point on is my what? It's support, because that's the lowest it hit until that what? It changes. There's my support. Everything in the middle, of course, we say midpoint of that 237 to what? Excuse me, let me go back to the thing here. Everything in the middle of that is going to be what? From 232, or in this case, we even say the high, but we'll just use it from the opening at that point, because we don't know if it opened up and went straight down or opened up and went high. Well, we can figure that out. Why? Because we can go to a smaller time frame. A smaller time frame actually show you exactly what happened in real time. Whether it went straight up in the very beginning, pulled back in the very beginning, or went sideways in the very beginning. Isn't that something? You get to see all that through all that entire move, and you won't feel like, okay, I don't know what's going on. That's the importance of go ahead. I'm sorry.
No. Just when you did that, when you decided what the exit would have been, you subtracted the actual number of the open from the.
I used the visual. I'm using it as established from the beginning of the report. If you didn't buy this stock at the very beginning and you waited all the way to the top when it hit the top, let's say whenever you came in, we just used it as a case study. We didn't really detail whether or not this would have been a good trade here or up here. I'm just saying, under the rules, if I came to the stock and looked at it just from the point where I was just using it as a case study and say, okay, well, what's the resistance here, right? Where's the support at? Okay, what happened within this hour worth of trading? What was the open, high, low, close, right? I'm using that candle because it's a big red candle, right? Again, something must, either people hit a point of resistance and ran for the hills, some news might have came out, something happened for it to pull back, right? It just probably just got tired, right? The chart got tired. The reality here is that after it made this move here, it retraced that entire move and actually went lower. Broke and went lower. That's the signal of what? That's even more of a signal of what? A bearish trend, right?
Oh, bearish,
So,
yeah.
but that's just in the moment. But if I came to the chart for the first time and didn't know what was going on, I'm just going to look and see what's going on. I got my indicators up. I got my 20 moving average, the light blue line. I see it bounce off that, initially rolled up, hit the top of the Bollinger Band. It hit the top here. It hit the top of that Bollinger Band right there. That's resistance. Look to the left, resistance. This resistance. Word clear as day, resistance. That means it's going to struggle to go higher. Am I trying to get long that position at the resistance point there if I just came to the stock for the first time in that hour? No. I see that's a what? A point of resistance, right? My first look is say what? I might need to think about taking a bear position here. This thing didn't break out above here because my probability of it breaking higher is what? That much more greater now, right? Than what it was if it started way down here at the bottom. Because I just seen where it came from. It made that kind of move. All right, yeah, I'm finna play this back to the downside. At least I feel more convicted that I hit a point of what? Resistance, because what I've been taught to learn that when we bank up against certain moving averages, right? Certain values of that tells you that this stock is having trouble going higher. I need to start thinking about it going lower. Or if I don't know how to short or buy a put, I'm supposed to do what? Sit on my hands and do exactly nothing. Why? Because the buying has already what? Finished. And you have to wait for the next setup. Any way you look at it, it's telling you patience. Again, if you late to the move, it's okay, right? It's okay. You just got to catch it on the next time. It gives you what? A buy opportunity. Essentially, in that moment, all you did was gain some actionable intel that you have now given you perspective. So when you see these kind of things, and again in the future, voila, you know how to act on it to a degree, to a degree. But everything that preceded it, again, signal. Everything that came afterward, definitely a signal, because it retraced that entire move that happened in 3 days worth of trading. This day. You hit resistance at the top of your Bollinger Bands, and it's no secret that even with the Bollinger Bands on, let me look. I'm finna remove all this stuff off the screen. Now I'm finna show you exactly why we preach technical analysis in a way where you use it, in adjacent with fundamentals. Clearly, if I go to this chart here, look at the Bollinger Bands here. This blue line or green line at the very bottom, right? The market brought NVIDIA down to that green line and resistance and pivoted. It did not break below it. It held support there. It held. It took it all the way back to the top of the Bollinger Bands, this top green line. And guess what? It hit it and pivoted. And guess what it did after that? It could have brought it down and just went sideways. It could have brought it down just a little bit and went sideways. Eventually, over what? Over the next 2 days, right? 2 days, it brought it all the way back to where it came from. And it hit the bottom of the Bollinger Bands again here and pivoted again. And went all the way back to the Bollinger Bands again at the top here. Hit resistance several times. Pivot. Oh, then it kept going higher. Oh, isn't that something? Guess what? In that moment, the price action was so strong because it been to that place before in resistance. Now, guess what it did the second time around or the third time around? It broke above it. It broke resistance here and went on to make what? Higher lows. This establishing a what? An uptrend. Not only did it break that old resistance there, it went all the way to the top of a major indicator. It's 200 moving average here, and then hit resistance way up there before I even thought about pulling back a little bit. These are signals and learning how to read, again, the money, essentially real time reconnaissance. When you go back and look to the left of a chart, you're establishing price action, you're establishing, again, supremacy of a bias, directional bias, whether it's bullish or bearish, based upon all those rules. Now you'll see these things over and over and over and over and over and over and over again, because that's a part of you doing what? Research to get familiar with what you're seeing, your landscape. You buy a property, you buy that property, you want to know every inch of that property best you can. You need to know if there's a well in the ground, if there's any kind of bad stumps in there or roots, whatever you need to do to learn your property, because now it's yours. You need to know where you can build stuff on, where you can't build stuff, if it's soft sand or it's hard sand. Again, if you got termites, if you don't got termites, if you got, wood-eating beetles or something. It's just knowing what you're getting into. Like you don't want to buy a car, it's a lemon, right? Right? You're like, man, this ain't good. You kick the tire, you think that's enough. That's not enough. What's underneath the hood? Right? I don't need to worry about it. The tires look good. All right, good luck. Right? You're gonna be doing like the Flintstones. You're gonna be pushing your feet exposed to what? Hitting the gas pedal. You're gonna be driving the Flintstone cars. This is the reality of that. It's just knowing everything about your situation so you can make good informed decision with your money. So that's why we keep preaching these things you cannot skip. These things you cannot skip. I repeat, these things you cannot skip, right? You cannot skip these things. You cannot skip these things, right? Or some would say what? Price action. Some would say investor sentiment, right? Either way, right? I investor sentiment, IS. You can't skip these three things. These are the what? The prerequisites. Everything inside of technical analysis is just what? Cheat codes to learn how to map the money visually, mechanically. We call it what? The where in the when of the 4 pillars, right? 4 pillars are very simple. What you're trading, why you're trading it, where to trade it, and then when to actually pull the trigger. The what and the why deals with what? Fundamental analysis, what's driving the stock. The where and the when deals with what? Technical, because these are what? Mechanical things that you're going to do. They deal with what? Technical analysis. And then everything in terms of what, why, where, and when all together equates to proper what? Price actions. Because sometimes people buy stock just because it's name brand. We talked about that with Apple. We talked about how stock, when they kind of establish a level of supremacy or support, because it's that type of stock and it's strong, big money always buys it because, oh, that's NVIDIA. I'm going to buy that support just on the strength. That's price action realization, so to speak. Because they know it typically has what? Big moves, right? It has a big ATR, right? Average true range or average trading range. Right? NVIDIA average trading range probably around about what, 10, 12 bucks sometimes, $7, $8. That means you can move that much in one day. That's a lot of money. Especially an option contract, right? Again, essentially, that area we just talked about. All those things are very vital and becoming very what? Proficient in this craft. So I don't want, again, I repeat, I don't want you to get ahead of yourself. Don't put that cart for the horse. Let's learn technicals properly. Let's learn fundamentals properly, right? Let's learn price action and investor sentiment. Let's learn how to read the room, as they say, read the room, right? Reading the room in this is the same thing when I come to a chart and I say, hey, find me the OHLC for this particular mark on the candle, scheme on the chart. And the first thing you go look for what? That candle. You go pull up yourself, or you go look at my chart for wherever I have. If I have the crosshairs over a particular candle, the first thing you're gonna say, okay, what chart I'm on? Is he on the hourly, the 5 minute, the daily, the 15, the 4 hour? Right? You look to all around the chart here, you say, I'm gonna find exactly what chart frame he on. You to look around till you find it. First thing you see, okay, the video. Oh, that's the stock. Oh, 1 hour. I said 1.8. That must be the hourly chart. Okay. What was the open? I said OHLC here. Open at 237, right? 76. It had a high of 238, 55. Had a low of 226, 22, 97. Had a close of 229, 14. So everything in that entire candle movement, right, within 1 hour worth of trading, gave me a whole difference of what? A negative $8.63 from open to close. That was a negative 3.63 percentile loss in that 1 hour worth of trading. Do you know how much money that is on an option contract? That's what potential. Dang sure right. When you know from top to bottom.
I sure know to look out the loss.
Right. So this is the reality of knowing why these things are important. And you cannot skip them. It's not an and, if, or but. Why? Because they are binary readouts, right? Meaning they are what they are, right? The only difference is the price action, right? That's just buyers and sellers, how they fighting for that stock in that moment, the tug of war of bulls and bears, right? The FOMO chaser, the foam tracer, fear of losing money, the fear of what? Missing out, right? The FUD traders in there, fear, uncertainty, doubt. Man, that stock is garbage. Man, my stock is the bum. You got all that stuff happening in real time. in that 1 hour with the trading. It's like a Donnybrook. The Joker's in there hooking like a royal battle in a wrestling match. Somebody gonna come away with what? With the victory. Sometimes it's neutral. It just we end up having a 0-sum game. We just we all shake hands. It was a good fight. We took a war. We just broke even. But again, it's a lot of different things that makes or constitutes exactly why you, everybody on here need to realize that these are things we cannot skip in order to be great at this. As my brother Dynamic 3D, my brother David, be nothing less than great. Well, that means it comes with a whole lot of what? Due diligence and discipline to be great. You can't skip it. So if you ever get to a point you say, well, man, I don't know what this is. What is that? First thing we're going to say what? Take it to trial. Well, how do you take it to trial? You go right on to Investopedia. I don't know what this is. I'm finna find out today. As what Kevin Hart say? What's that favorite saying he say? You gonna what? You gonna learn today. You gonna learn today. Nah, try it. Play with it. And you can't try to go to nobody and try to convince them that it is what it's not, because they're gonna say, I done the research on that. I don't know what you're talking about. The research on this says what? Okay, Bollinger Band. What is the Bollinger Band? All right, Bollinger. I don't even know if I know how to spell it right? You just try to put it in there and see if it even come out right. It's gonna give you a read out. You're gonna say, man, I don't know what that is. All right, Bollinger Band. Well, guess what? You better keep figuring out till you get it right. Right? You will keep trying till you get it right. If nothing else, you go to Google. I'm just showing you how to do hard work. Bollinger Bands, right? Bollinger. I'm gonna spell the same way I just now do it. Bollinger Band, no L, 1 L, right? Look at it. Look what Google did.
2 L's.
Clear as day, right? Get what Google did. Google went in through your layup. We got you. Here's the layup. Here's how you get it right. You was over there struggling. I see you try to spell it with 1 L. It's Bollinger Band with 2 L. You put it on there, you click on that thing. Guess what it started doing? Oh, look at all this stuff about Bollinger Band. Oh, this what Bollinger Bands is. Okay, let me go a step further. Now I'm finna go figure out what it and it's registered. That means somebody didn't registered this. Somebody take claim over this. That means this is what groundbreaking factual information based upon the rules of whatever they supposed to do. I come down and start reading about Bollinger Band. What is it telling me? It's this, it's that. It's this. Oh, I also got what? I got pictures in my book. Now y'all know, boy. You put some pictures in the book, boy, you get your attention. If it's just words, you're gonna get all sleepy. They're gonna get hungry. I don't want to read. Right? I know my people, man. I ain't finna play. We finna get this money. Look, these are books that you want to read. These are words that you want to read, because familiarization puts you in a place of what? Conviction, knowledge, know-how, know what you're looking at. If we go there all the way through, okay, well, I'm gonna play the video first, then I'll read. That's what most people gonna do, right? I know how jokers did. They're gonna find a way to not read. Well, all right, we'll play that game. Well, guess what? They gave you a cheat code. Let's run it. Right? We're gonna run it.
Bollinger Bands were created by John Bollinger in the 1980s as a method for traders to identify extreme short-term prices in a security. The indicator is created by plotting the average of a predetermined number of prices along with 2 trading bands above and below. The outer bands are created by simply adding and subtracting 1 standard deviation from the moving average. Standard deviation is used to create this indicator because it is a common measure of volatility. Under normal conditions, traders will nearly always find the price of a security to trade within the bands. The bands will expand and contract as the price action of the security being studied becomes volatile, expansion, or becomes bound in a tight trading range, contraction. One of the main concepts to understand when using Bollinger Bands is that periods of low volatility generally tend to be followed by periods of high volatility and vice versa. In other words, if a trader notices that the Bollinger Bands start to pinch together, then there's a reasonable chance that volatility will increase and a trading opportunity will soon appear. Another method of using Bollinger Bands is to note when the price of a security moves beyond the upper or lower barriers. When the price moves above the upper band, prices are thought to be overbought and could be due for a pullback. Conversely, a move below the lower band suggests that the price is oversold, triggering a buy signal. Bollinger Bands have become a top trading tool for a good reason. Identifying prices that move beyond the bands helps traders take advantage of unjustifiably high or low prices. It is important for traders to monitor shifts in volatility, and few methods accomplish this better than Bollinger Bands.
Look at people that gave you what they call a pound of good game for free 99. Them people that gave you a pound of good game for free 99. If you buck against that and say, I'm gonna do it my way, it's okay. Good luck. Make sure you have some good discipline in play to kind of protect your situation. Either way you look at it, whether you use Bollinger Bands, Economical Cloud, Helsinki, Fibonacci retracement bands, 20 moving average, the 200, the 100, the 1,000 moving average, whatever you use, it's there to give you a signal. That's why they call them indicators, right? Oscillators, momentum gauge readouts. They're all there for what? A reason, right? And when you follow them or you trust them, chances are, because they've been tested over the years, they're gonna give you signals of what? Opportunity. Going back to that same movement there, that same little scenario we're talking about here, right? Everything in that whole entire movement honored and respected the ideal of what that Bollinger Band scenario is supposed to do. Look right here. Look at that little area right there. Support, resistance, back to support, right? Back to support. If you bucking that and you trying to get what? Get long here at resistance, good luck. If you trying to get what? Short here on the support, good luck. That means you're doing everything backwards. You refuse to honor what these Bollinger Bands are there for or support areas there for. If you refuse to honor those things, you're going to lose what? You're going to lose money. That's speaking to a lot of the trade, not just individual day trader, but even long-term investors too, because if you get to a point where you get frustrated with the stock because it may not be performing the way you want it to, this, that, and the third, and you just say you prematurely get out of stock at a time when you're supposed to be what? Being patient, right? Or you get into a stock when you need to be being, at a time when you probably should have been, really gauging the scenario. Either way you look at it, again, these things are there to help you out. It be the RSI, bid you use squeeze momentum, bid you just use, regular volume, whatever you use, these things are there to help you out. They're there for a reason. They're there for a reason. So that's why we say, take the time to learn exactly what the ideal of what technical analysis is. Everything inside of that, that's the gravy, right? That's the icing on the cake, right? At least when you become more familiar with it, you don't have to be a master at it. You can, because it costs you nothing. It's free information, but at least it'll help your conviction. Make sense? So that's the importance of that. That goes right back to everything we've been talking about. What's the title of this discussion tonight? Patience is a virtue. How you patient, and then yet at the same time you just jump out the window with no parachute. Them to deliver you the parachute. You like, I'm gonna jump out the window tomorrow. Okay, you went on Amazon, ordered a parachute. Amazon truck said it's about an hour away. You say I can't wait on that Amazon truck. I'm out the window. I'm out. Good luck. Right. I hope you got some bionic boots on where you can bounce. Right. Because you come out that third floor, you're gonna be looking ugly. That's how you trade blind, when you don't respect technical analysis, fundamental analysis, price action, just investor sentiment. Basically, that's what you're doing. You're chancing it. If you don't know and you still get into the trade, guess what's gonna happen? You either gonna get lucky or you finna take a L. Physically and mentally and emotionally, because it's the most frustrating thing ever is to get into a trade with high hopes and it lets you down. But if you get into it without no understanding why you're in the trade, it's gonna hurt you worse. Why? Because it's gonna hit your ego. I should be losing money. I'm so and so. Man, I was valedictorian on my class. I'm supposed to be real smart. Like, okay, yeah. Like, get over there in the corner with the rest of the people that took some L's. Get over there. Go right on over there with them. That's all they gonna do. Mark was like, go right over there with them and figure it out. And when you get right, get your mind right, come back over here when you know how to act right. That's the market. So, that's why I say, man, we in this thing for the long haul, guys. We're really trying to do something different in a way where the benefit of it outweighs the ideal of the risk. The risks are just being unprepared. because it's a environment where you don't have to deal with any of the things that most people have to deal with every day. Lack of this, lack of that, skin color, money, records, and all this goofy stuff that people try to judge people by every day, which in effectly, retards these people from being able to eat, survive, and live, right? It's weird, right? But y'all know this stuff. Again, it's a capitalist society. Everything that you do has to have a meaning or purpose to it if it comes with a survival aspect attached to it. Make sense? So learning a craft or a skill set, it comes along with that. You may take some bruises, some bumps, some L's in the process of learning. Just make sure you're just not overly costly. And if you learn the hard way, then the smart way the first time, guess what? You're going to be a good reader to help somebody else in the future know what not to do. That's the only responsible thing you can do. Yeah. Right? So we're going to focus on that. We're going to keep those things important. So before we get ready to close out here, all right, let's go really quick here. Really, really, really quick. Let me see. Blah, 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 blah. Is this the one? Yep. Really quick here. All right. So, and this is one of the old ones that I put up a while back. But this is important in this moment because we talked about patience, right? We talked about the importance of patience, right? Ideal how to even how to deal with fear, right? Right? How to deal with fear, right? Fear can really hurt a person entry and exit, right? Because again, you talk about money, right? You talk about the dealing with money here. So the top of this says what? Somebody read the top of that really quick, if you don't mind. Somebody read that opening part of this really quick here, right? What does this at the very top say right here? What does that say up here at the very top here?
Change the way you think in your bank account / brokerage account will follow. Afurakan Emporium.
Right, so I have these little sayings that I have a lot. I call them t-shirt moments. I call them these are little moments that we kind of hold ourselves accountable for. This is what they call when the hood, they call it real spit, right? That's that real spit. That's that real, right? You really have to change the way you think, right? Because you're doing something that you may never done before. Well, obviously it's gonna cause you to feel a little uncomfortable because you're coming into uncharted territory. You got to go through these rules to figure out how this stuff works. So yeah, changing the way you think ain't necessarily a bad thing, right? Because it's going to help you have more insight, more knowledge. So change the way you think, and your bank account and brokerage account will follow. A lot of other things around your life will too, because perspective is great, right? But it's all about your mentality, right? So why a new thinking methodology? Right? Why a new thinking methodology, right? We talked about research methodology. That's what you go through the mechanics of figuring that stuff out. But also from a mental perspective, you got to start thinking different. If you see something, if you're shown something that says this or shows you or renders this kind of visual, if you look at that and say, oh, if I drew this right here and I ask y'all what kind of shape that is, what would y'all say?
A circle.
If somebody it's a square, what's going to happen?
That's
problems.
They're going to take some major, they're going to have some problems in life. They're going to have some problems, right?
Yes, sir.
Under what we know in life in terms of it being a circle, you're like, no, that's not a circle, that's a circle. Now it's a square. Okay. Okay.
It's like that.
Right? A new way of thinking, right? Somebody taught you a square. Guess what? You may grown up your entire life thinking that's a square. Your convictions are so strong. It's a square. I was taught that it was a square, but guess what? The consensus says that it's a circle. It may be hard for people to accept that. Everything from that point going forward is going to be because that person now finna go through a whole lot of resisting the information, resisting the ideal of what it's going to take for them to be understanding on the consensus level, be it scientific and any of that. If you want to, whatever, they're going to push back. They're going to have a hard time being able to utilize that circle properly the way it needs to be used, or what it's designed to give you in terms of signals, readouts, et cetera, because their way of thinking is skewed. It's been altered. They've been given bad information, right? Life. Y'all know exactly where I'm going with that. Life. A lot of people gave us bad information, revisionist history. We unpacking all that stuff right now, coming back to a place of what? Understanding, understanding, overstanding, whatever. It's all relative at the end of the day. That comes with what? Proper research methodology, not just physically, but also what? Mentally. You got to change the way you think to be good in this market. Why? Because the market gonna eat you alive if you try to come in this thing and just go say, well, man, I was a good football player, man, I know how to read a playbook. Well, guess what? This playbook here is totally different than what you did over there at the football camp. True story. It may have similarities, but it's still gonna have differences and nuances.
That's right.
True story. So it's okay to learn something, add more knowledge to your situation. So that's why we here trying to, explain it every single moment we get, because a lot of people are going to come at you and say, no, you ain't got to go through all that. Just learn this and you'll be good. Man, don't listen to that person, man. You ain't got to learn all that stuff, man. Look, here's a buy point. Here's a sell point. Just do this and you straight. I know a lot of people that came through this game that came at the market that way. And a lot of times you say, well, is those people still around? Crickets. Because they may not have the interest level you to really learn it at the level that's going to keep you focused on trying to build out your goals in this, to learn this. Again, you have a lifetime to get this. As long as you're alive, the market is going to be pumping. Even in the middle of a nuclear annihilation, we're dealing with that right now, literally. And these people saying, man, what? Pricing into the market, it's priced in. These people that greedy in Wall Street. What did the market do today? It ripped higher. Putin came out, put a threat out again at the end of the day that he still think about what? And nuclear what? Warfare to the battlefield. All of a sudden the market got spooked again and it pulled back after running up on what? On rate hike from the Federal Reserve and market showing what? Contraction, weakness, low GDP for the next 3-4 years. Rate hikes coming, 7 of them in this year alone. Everybody around the world situation jacked up because of COVID and war. And all of a sudden these people still just overly bullish, because they got spoiled because of the Federal Reserve printed all that fake money and gave it to the stock market and not the people that needed it the most. It's a whole different dichotomy between Main Street and that's another story for another day. I'd be another 8 hours trying to break that stuff down. Ain't like we talked about it before, but again, you have to learn how to pivot and audible, change the way you think. This stuff is a lot of it is mental, right? So this excerpt here is going to give perspective. Now, it's many other books we pull from. This is what excerpt that I pulled out and I added, kind of, subtitled it in a lot of ways, or even pre-titled it, right? Change the way you think, and your bank account and broker account will follow. You have to realize that the market is trying to, again, shake you out of your trade, shake you out of your game plan, right? It's also operating under the fear and anxiety scenario. All right, this part right here. It says what? Someone attempted to operate in a trading environment in all the familiar ways that would assure getting what they want will likely find themselves in a constant state of what? Frustration, anxiety, and fear. Everything we've been talking about tonight has to deal with patience. How are you going to have patience if you still overly frustrated, dealing with anxiety, and don't know how to read fear? So wondering what is wrong or thinking something must be wrong with them. If you stuck in that mode, you need to back away from the trade. Stop trying to use real money. Go back to the basics. Figure out some things that give you a better read on the market. Don't just keep trying to chance it. I used to have those issues like that at some point. I'd be up. I'd be crushing, especially in the thick, and we were just really, really hammering trading before they start putting all the rules in play. Like, man, we used to kill the little one tight spread trade, man. We used to beat the brakes off the one tight trade. It would never joke and make like $6,000-$8,000, right? In like one little trade, like one trade. We bank like $6,000-$7,000 on some trades. One trade, right? And then one thing you gotta do is protect it. If I have a moment of a distraction or something like that stuff used to kill me back in the day. I get distracted, something happened, whatever. Now I'm in the middle of a high momentum trade. And guess what? Something crazy happened. You already know the rest. When you realize, okay, this stuff ain't finna hurt me no more. Let me focus down on protecting my gains now. Let me put trailing stops on my money. Let me put stop loss on it now. Let me do a lot of other things and be able to, circumvent any problem that may come or arise when I'm trying to engage this market. Because at this moment, you working. It's like, it's no different if you're on a job for Mr. Charlie and you're trying to perform your job and somebody come around you distracting you. You get a phone call, unfortunately, and it's distracting you in your moment. You could have been in a very tense situation. It's the same reality. You have to dumb all that noise down and focus on what you're trying to accomplish. It's, again, changing the way you think, making sure you have all your checks and balances in place so you don't get distracted, or at least you put layers of security on your money so you don't have to worry about losing it. You need to brief the people around you. If you got a spouse, if you got kids, oh, mommy working right now, daddy working right now. Hey, your spouse, look, right now I need this quiet space. I need you to understand this. This is my profession too. Same way you want me to respect you. Brief the people around you on what you're trying to do. Right? Don't just accept or expect that they're just supposed to know. You're running an online business. These are the parameters of what we say thinking, right? Learning how to change the way you think, right? Why a new way of thinking methodology is literally what? It's non-negotiable. Because this environment as an investor trader can get very tense when big money on the line. And these people sit around make hundreds of thousands of dollars every day in this. I mean, I know these people personally, and y'all did 90,000 a day. Oh, today was $160,000. And you tell that to the average person that don't know this stuff, they're like, man, you lying. How many people you talk to people about this stuff bit, and they look at you kind of sideways, they don't understand it. They're like, no, you just lying, bro. Ain't no in the world somebody making that kind of money like that. They don't understand. It's the reason why you're here and you're trying to learn it, because you want to be in that position one day, and you are. So you're going to stick with what is, set it in place so you can learn it properly. So when you go out there, guess what? You'll know what to do. Because everything from the onslaught looks very what? It looks easy. Because you hear people talk about it, and like, man, that sounds easy. What did this article say? It said the irony is, of course, that on the surface, trading looks very simple. So simple. When in fact, most people will find it to be the most difficult endeavor they ever undertook. It could be difficult if you buck against the rules of engagement. You try to do your thing as opposed to what the technical analysis tells you you're supposed to do, what the fundamentals are telling you what you need to read, what the price action is showing you how people feel about that stock. You buck against those things, chances are you're going to lose money. All right. Success will always seem so close, yet always so elusive. And this frustration will continue until the trader adapts. Right there. It will continue until the trader adapts to the conditions that exist in the trading environment by learning a new thinking methodology. People run up on you, primary sources, source up or shut. Man, look, we dealing with primary sources all day, every day. And the nuances and money. You're a good read on mental aspects, binary aspects, black swan. If you become an investor trader, look, ain't nothing else out there that, man, look, you performing some real miracles. Your environment is vast. You're dealing with a global marketplace. People from all over the world, all walks of life, engage in the stock at the same time. You have to be a good read on all that. Technicals, fundamentals, and investment aspect of it, and walk away with a bag. How monumental is that? As people with master's degrees, PhDs could not even come close to what you do every day because they're programmed. They don't understand the value of nuances of how to read money like this. That's the difference. It is not to or downgrade that scenario, what they got in their programming. It serves them well to be able to put food on their clothes. But I'm saying over here, it's a whole nother ballgame because you're literally learning their job and then some, at least to a degree. Because you learn about all these different industries, what they stand for, what they, what are they, what is their use case, so to speak, right? You learn about biotechnology, you learn about materials, healthcare. You learn all this stuff by way of becoming a trader, by reading up on these companies. Intel. If I always tell you, find somebody got Alzheimer's or something like that, get them interested in investing trading. Look at it, their brain gonna get to working overload. It's like learning a new language. It's literally learning a new language. Coding, if you will, right? So the importance of it, monumental. right? So we got this excerpt here. I'm not going to go through all of it. Again, I just want to read that kind of precept of it a little bit to give you the value of what we're talking about here tonight is just that. Patience is a virtue, right? As we say, when, again, removing fear from the equation. Removing fear from the equation. Fear is no more. I'm going to use the Will Smith definition. And a lot of people use it, the same thing. Y'all probably heard it before. What is fear? What is the definition of fear? Anybody? What is the definition of fear?
False evidence appearing real.
Come through, over David. Say that again with the chest, if you don't mind, sir.
False evidence appearing real.
False evidence appearing real. What is the true nature of what that should be? Danger is something totally different. Fear is false evidence appearing real. Danger is real, real problems. There's a difference. If you jump into the market under the ideal of, again, misreading something, not accepting what what something really is, you're gonna fall right underneath that value of what fear is trying to trick you into believing. It's gonna cause you to be frustrated. You're gonna have anxiety, and again, ultimately, you're gonna be caught up in fear. But that's all it is: false evidence appearing real. No, what did the chart say? What did the price action say? What did the fundamentals tell you? What are they telling you? It's telling you to focus on this. This is what it's showing you. This is how you map the money. This is how you're gonna get paid. For every time we talk about a certain stock, certain industry, certain scenario, rotation from growth stocks to value to momentum, back to growth, it's a cyclical environment all the time. People just rotate money all day, every day. Rediversification, rebalancing. It's the same thing over and over and over and over and over again. Again, you're learning how to run a business, an online business. Take it serious. Take it serious. It's going to benefit you more than you think. And then you get a chance to do the greatest thing ever. Pay it forward. You got kids. You got spouse. You got friends. You got family. You get to pay this craft forward. Properly, though. Don't give people don't give them bad information. Right? Pay it forward the right way. As they say, because if not, you give them bad information. It's a culturally learned behavior that results in unsuccessful trading experience. That's not just in trading, but in life in general. Revisionist history, bad information. Joker trying to steer you left when you know you need to be going right. You got to be smart enough to realize that. If you're not, it's going to be a long journey just to get from A to B. And we always use what approach? Least path of what? Resistance. I mean, I say that to them blue in the face. Least path of resistance. Get the knowledge first. Get the knowledge first. Then go out there and get the power, and the profit will follow you. It'll come naturally in that moment. Right? So understand that, right? Again, break away. Y'all know what we say in the black community, break away from them generational curses. I was taught this way for all these years. Guess what? That don't mean that you can't learn nothing new today. You're going to learn today. In immortal words of Kevin Hart, you're going to learn today. Or you're going to keep making bad decisions on bad information. That's the part about what we're dealing with now as a species and a people. People that lied to us so much, we don't know what's up, what's down, what's right. You get faced with new information, you still buck against. You're like, man, I don't want to hear that. I'm going to go right over here and just wait. Wait on what? I'm just going to wait. Okay, well, good luck waiting. That wait is going to weight you down, literally weight you down while everybody's going to be bypassing you. That's just how the life is trying to set up. It's giving you signals. We got to buck against the trend. Let's not get caught up in simple things that can give us, headaches and heartaches. Again, you're running a business. This stuff carry over into your personal life too, right? So understand that you're trying to acquire skills, right? Skills that can really transform your situation. If they tell you to do it a certain way and it gives you all the mechanics to help you get that, follow it. Prove it. If anything, try to prove it wrong, not by trying to in real time. But if you see something else that they might have missed, guess what? You just add an extra layer of skill set to your scenario. Like I always keep saying this, right? I got this one little strategy, right? I brag about it, right? Every blue mile brag about it. I have one strategy. What is my little favorite strategy? I talked about it so much, it's just funny, right? I have one little strategy. Right? People have, you got to have a strategy, bro. You got to be, man, you be doing this and doing that. What's my little one little strategy, right? I gotta cut my camera on with him. I gotta look at y'all in the eyes, right? Because I don't want y'all to be right here playing. I have one little strategy. I'm gonna go southern on y'all. I'm gonna call it strategy with the K. I got one little strategy, right? My little 9:50, 10 o'clock pullback. That's my only strategy, guys. Everything else I just learned, from trading, obviously reading and studying, research, comparative value, how a person's trading style is. I added to my chink. I just say, eat the meat, spit the bone. I made something that works for me and tailor-made it. And then in doing so, I done even more deductive reasoning and said, okay, well, if I'm gonna share the skill with everybody else, I got to be mindful of what everybody else may be thinking. I can't just take the approach that I know only one way. Y'all got to follow me. That's goofy, right? Because everybody don't think 100% the same in the very beginning. We making come to a consensus at some point, but initially, I got to meet that person where they are. Any good teacher, instructor, mentor, they got to meet people where they are. And then you slowly try to peel that onion, the layers, whatever it is, until, we can kind of come to a form of consensus. That's how you build good bridges, right? And that's what this is about, building good, environments where we can come into and say, well, you know what? I know everybody here is willfully trying to put out good information to help everybody because this is about money. I don't want to lose no money because I'm chasing, right? Or I just got bad information. No, because in the day, that responsibility is still going to fall back on you, the individual, not that person. It's going to fall back on you, right? So we're trying to reduce that much as possible, right? So it's okay to learn something new. It's okay to challenge old antiquated ways of looking at stuff. That's what makes life so dynamic and not static. We don't want to live a static life. Who wants to deal with what we had to deal with, what our ancestors dealt with? Like, no, are you kidding me? Well, look, all right. Like, it ain't gonna happen. So learning the dynamics of goal achievement so you can stay positively focused on what you want and not what you fear. That's important. That'd be a good t-shirt moment. It'd be long, but hey, guess what? It means a lot, right? Right. Learning how to recognize skills you need to progress as a trader and then stay focused on the development of those skills instead of the money. You've heard this saying before. If you do all the proper things, right? Technical analysis, fundamental analysis, the money will automatically be in your P&L before you hit that sell button. That's a true story. I know traders that trade like that. It's almost like they're trading blind, no indicators, no nothing. They understand price action. They understand what support resistance by looking at the chart. They know levels, channels, top, bottom, midpoint, and they just sitting there getting it. And then they hit that button, and they hit that button again a second time. They done. They look down there. Oh, there was this much I captured. Okay, so be it. We'll take it. That's a skill set, and it happens all the time. That's what the algorithm actually does. Crazy, ain't it? How quant algos do the same thing. So again, these things are important. So it's like 9 good ones. If you guys want this, I gave it out before. I'm gonna give it out again. Of course, this night is the best time to give it out. Go through these bullet points. These just one of many things that within this excerpt here that I think to me is just monumental. I mean, you can use it with Forex, crypto, options, whatever you trade, penny stocks. I don't care. Whatever you trade, even entrepreneur endeavors in life, whatever you're doing as a business person, these things right here are great. These are great ways to keep keep you mentally sharp and on point what you're trying to accomplish. Because it's about risk management. Essentially, it's about risk management. Right? Different styles, different trading systems, metaphor, trading view, whatever, right? Whatever you use, trade station, whatever. Right? It's still somewhat all similar in certain aspects. The graphic user interface, whatever, you'll figure it out. Again, over time, it's trying to give you the same purpose, right? The use case of it, right? So really good information here. Again, I'm not going to read everything now. It's already late. I got to eat, right? My stomach touching my back. Y'all ain't going to get me tonight. Right? I'm going to eat, all right? So unsuccessful traders, right? There are many reasons why traders are not successful. These reasons can be broken down into 3 broad categories. First one, lack of skills. Grand opening, grand closing. If you know you lacking skills and you trading real money, guess what's going to happen? Unsuccessful trader, off with his head, right? Essentially, that's what's going to happen. And the market going to force you to learn because it's going to keep going in your pocket. Number 2, limiting beliefs, right? This is not a game of belief. It has nuances of why you can kind of foresee potential movement, but it's not based on a hard line belief. It has the propensity to change. Audible. You have to be flexible. And this is a lot of this stuff speaking to traders now. I know it seems like, okay, we talk long-term investor, of course, is different, but just for the individual trader, these are, you got to know these things, right? Third, lack of self-discipline. Ooh, boy, clean that one up there. Boy, that right there help you in life. Right? Everybody can, need to get that one, right? Because that's going to make you a good, respective person where this person has control. Control is like, man, like gold. It's like gold in a lot of people's lives when they truly establish what control really does for them in a situation. Because control is another form of what? Patience. Practice. Yeah, Alan Ives, we're talking about practice. Practice. Show it to practice, man. Right? Show it to practice. Right? So very important. So those three things, again, don't need to even fight them. They're there to help you. Make sense? So I'll make sure I email this to everybody in the mailing list. Again, some of you guys already have it. I posted it like several times, but I just keep reiterating it, bringing it back. Because in moments like this, in this kind of marketplace, everybody's kind of off their kilter a little bit because the market is desperate. The government is desperate. They got a war scenario going on. We don't know if it's going to escalate to other people getting involved. It's affecting the stock market. We're still dealing with a pandemic. Inflation is kicking everybody in the teeth because we sat down too long during the pandemic and hurt our production as a global environment. Less production. Less products cause inflation. Too many dollars chasing fuel goods. That causes inflation. GDPs contract. A lot of issues happen where people are not getting what they need. And because of that, chaos ensues. And if you was already a person who was struggling, that makes your struggle that much more worse. So yeah, we got to think about a lot of those things in real time, but it doesn't preclude us from being able to to do our part to make sure we figure out a way to help our situation. Especially in this craft or this industry, whatever people want to call it. It's the same, both crafts, industry. So it's important, right? So that's all I got, guys. Again, very important, very good information, guys. We got to take this up to heart, man. And I'm saying it because, again, if you have an interest for this, it's going to really lead to you having a passion for it at some point, obviously. Because the great thing about this, when you have a passion in this, it leads to a paycheck. Think about that. You have a passion for this. Eventually, if you do everything right, it's going to lead to a paycheck. Ain't no better feeling when you can go in the market and take money from it. Y'all know my little thing. Every time it takes some money from the market, I say, what? This one here for the ancestors. I'm going to get their money. I'm going to collect them checks, right? I got it today. I don't know who the ancestors were, but I'm like, I got that check today for you, Miss Ruberdale. No worries, right? Ain't no worries. I got you. Right? I got some of your money back today. Right? Talking up for, for Miss Ruberdale. This is the mentality, though. Whatever works to get you gainfully excited about the opportunity in it, find that and build from it. Right? If it's your kids, if it's your future, if it's your spouse, if it's whatever, right? That inspiration ain't hard to find when you look around, because in this case, again, there's no other ancillary things to block you from this opportunity. Again, race, color, creed, sex, gender, orientation, midget, humpback, credit, no credit, felonies, no felonies, baby mothers, no baby mother, college education, no college education. None of those things can block you from this opportunity. And the joker that's riding past you, looking down on you, don't understand you have a skill like this. A pandemic hit them next day, their degree, worthless. Their job, worthless. Guess what was still open during the time of the pandemic? Stock market. Grand opening, grand closing. See how that worked? Look at the universe. And they say, look at won't the universe do it? They're gonna be like in church, won't he do it? They want the universe to do it. You just blow past, rattle past joke. Yeah, I'm still making money, bro. I don't know what you talking about. Stock market open. I don't know what you talking about. That stock market open. Forex market open. Crypto market open 24/7. Man, that means I have unlimited opportunity at my fingertips. It's up to me to do what I need to do with it. That's simple. It's that simple. All right, so that's it. So I'm out, guys. I enjoyed this deal. I appreciate you guys a gazillion percent. Again, it's the community that makes this. We are peers at this. As I say, Ubuntu. I am because we are. right?
Okay.
And then when one teaches, two learn. We all gonna learn in this because this is information that's shared nationwide. You need think tanks, you need environments where you can go and learn without pressure, without anxiety, without people trying to look down on you or judge you. This is not what this is about. Why? Because it's information that anybody can use. If they learn it properly, guess what? They can go and overtake a joker that's been doing it 20 years. They can just keep doing it the wrong way. That's why I love this stuff. It separates, a lot of people from those who are hungry as opposed to those who are just, here for the moment, right? So we're not going to lose that. So let's stay focused in that, and we're going to build this bridge properly, right? So that's it, guys. We got any other questions before we get out of here, guys? Before we get out of here this evening, any other questions? Any other questions before we get out of here? Anybody, everybody scream Curtis Blow style, right? When that Curtis Blow,
No questions, man. No questions over. Great call, though. Great call. Very,
Appreciate it.
Very informative.
Appreciate it 1,000,000%. Every time we look to come live, we gonna work. Y'all know my mentality. We cut this camera on, we gonna go to work. We ain't gonna just show up in the Lambo and just post out and put some old stacks of cash near the desk and be like, look, bro, we getting it. We gonna go to work over here. Right. All right. So I'm humble. All right. All right. So anybody else, guys, any other questions? Any other things? Anybody before we get out of here? Everybody solid, everybody good to go.
Maybe later I would like to go over what he did with the entry things, but not right now.
No, but good. It's archived. Now, this is recorded. Y'all know, go to YouTube. This is archive on YouTube. Everything we do in training session, archive on YouTube. So you'll go right to YouTube and do that research, back research. Again, go to Investopedia, figuring out what's entry exit. You already know my thing. I'm gonna say, I gotta say this on the way out the door because y'all know, as the saying goes, investing and trading is not a what? It's not a lazy man's game. This is chess, not checkers. You're making 4D chess move. Wall Street is making 5D chess move. The government making 6D chess move. They done took your money, your taxpayers, and gave your money, gave to everybody else except you. And you figuring out what they doing for me, what they ain't doing. Look, they're gonna have you going in circles all day, every day. It's the greatest hustle ever. So guess what? You better learn how to start hustling them. They put this system in play. They get greedy and capitalize on what they've already stolen. Guess what? Go get your portion of it too. It's already your tax dollars anyway. Holding it up. True story. What's the Fred right now? What is the Fred right now? The Fred of St. Louis? Y'all know how much money they just took from y'all during COVID? Y'all want to see? Y'all want to see? Do y'all really want to see how much money they took from y'all since COVID? I'm going to show you real quick on the way out. On the way out the door. I'm going to hit you on the way out the door. Right? They say, like what Buddy said on the Django, we're going to hit you in the head with a hammer and throw you in the hole. We're going to work you up from sun up to Sunday all day, every day. And when you get tired and old, we're going to hit you in the head with a hammer and throw you in the hole. This is what they do with money. They hit you in the head with a hammer, and then now they trying to throw you in the hole. Y'all see that hammer right there? That's $8.9 million. They done took from the taxpayers. Y'all know I paused there, like 8.9 million. That ain't nothing. I wait for somebody to catch me on that. But
I'm about to say, man, that's true.
I had to sit there for a moment. Somebody gonna catch it. Where my smart people? They gonna say something in a minute, but I know they're finna catch this.
I'm about to say, oh, but slipping now. He ain't slipping.
You know, it's always a trick, a method of my madness. I'm gonna provoke you now. I'm gonna make you think about this thing. That's 8.9 trillion. 8.9 trillion. I'm gonna ask y'all real quick, like Samuel L. Jackson asked you in that Capital One commercial. What's in your wallet? That's all I'm asking. How much is that in your wallet? I'm just asking for a friend. How much is that in your wallet?
Not enough.
Y'all know they stopped quantitative easing last week. Did they not?
That's what they said.
Into their quantitative easing. I'm going to show you how to check the government and make sure they holding up to their word or they lying or they not. That means last week we stopped at 8.9. It was like 8.9 trillion. Why do we see 54 right there? Y'all see that 54 right there? What is that 54?
Yeah.
That means new money.
Oh, look, Nasir.
How you printing new money? You supposed to have stopped last week.
New money
Deep.
Called them red-handed. Red-handed. Look right here, guys. See right there, 8.9. Last Wednesday, March the 2nd. Or let's say last week or last couple weeks, whatever. Let me move over here. I'm finna show you here. That one there, 8.9, right? Quantity easing ended last week. 8.9, what? 1.0, right? Why do we have an extra what? 54 printed money today? This money came literally yesterday, or you can say it today, because that's how the Fed, when they print, it goes into the next session, right? They printed 53 extra billion dollars, guys. And he spoke yesterday saying that they stopped QE. We're done with all that. We finished that up. Now we getting ready to do a balance sheet runoff. And they still pump the market today, guys. With some, I'll be here for another. All right, let me just stop. Stop, brother. Back away while you still can get away here. This is how you can catch the government. This is how you can catch them lying too. Call them red-handed. There was no policy procedure put in play for them to print that extra $54 billion. I'll leave it at that. Because a lot of jokers right now probably like, oh, hold up, bro. What you talking about, bro? Nah,
that's a drop the mic moment, bro.
I'm saying nerd moment, right?
Drop the mic.
You caught him red.
Because
QE
over with. Because QE over with.
QE ended last week. Remember, we had the date, everything. Remember, we hadn't even did a live video on it, right? It was people all up and down, Twitter, Facebook, Money Manager, everybody like, man, it's finally over. QE is finally over. Keep in mind, they had been doing QE since 2007.
What's QE?
See?
That's what I done.
See? See? You see what I did there right there? Why I ain't sitting down like, after all that good information we did gave, the first thing you used to do was right to Investopedia and put in. I'm gonna see what this joker talking about.
Okay,
I'm figure out
right
the date.
Now.
See that? Got him. This how you even do checks and balances on your government. When they tell you one thing and do the opposite, call them red-handed. What did the stock market do today, guys? The market went up like it was what? Like they were still pumping what? Money into the market. Did it not? How is that possible?
Mm-hmm.
How is that possible, right? Again, y'all already know what it is. Anyway.
It's quantitative easing. Bonds and assets.
Give me that first paragraph. Read that entire paragraph, sis, if you don't mind. What does it say?
Quantitative easing usually involves a country's central bank purchasing longer-term government bonds, as well as other types of assets, such as sorry, hold up. All right, you know what? Because where I took it from, it started.
Wait for it. You got everybody all hungry, and then you led them, and now they got to see it like, okay. we done. Don't even worry about it. The dime hold up a dollar, but that stock then ran already. That stock already gone. Everybody missing internet thing. We know Miss Lino, look at that stock going. But yeah, it's basically, that's them purchasing what? Mortgage-backed securities and T-bills, and sometimes they do actually have, sometimes they can purchase actual stocks when it gets real emergency purposes. But in doing so, they take on what? The ability to print digital money out of thin air and buy real assets with it. It's actually what? Unconstitutional by value, but because it's called monetizing the debt. It's only supposed to be used for what they call very emergency purposes. And when they exceed that, that's when you have a problem where it comes into a point of inflation. Why? Because you print all this money, right? On the M1, M2 money supply that's out there. And if you don't have enough production to equate that in terms of debt to liability ratio, it's the same reality, right? Now you have what they call $2 million chasing two feel good. What is that known to be? A form of inflation. You get to raise your prices because there's scarcity. If there's scarcity, people what? Clamor to what? To buy things that they know they're going to probably what? Not have in the future, right? It's a insidious process. The government takes us through this stuff all the time to stress test us for a reason. This stuff ain't by accident, guys. The 1% own majority of the assets in this nation. they're benefiting off stocks, becoming exorbitant cheap, then getting very expensive. They cash out, wait for some of the next catastrophe to happen so it can pull back and they can buy again. Again, mind you, people who don't have understanding about the stock market, they're living paycheck to paycheck. They can't afford to take those L's. They can't afford to deal with inflation that's sitting at 16, 17, 9, 10%. Why? Because every year that they don't get a raise, that means inflation is eating into the money that they already barely got right now. And you're trying to raise the family with that. And you got to worry about what one-off events happening inside your household, emergencies, things to that nature. And you don't have proper saving because you don't have a way to have extra surplus. You don't have one form of income coming in. How you going to be able to pay it for what? Emergency moments. It's a hustle. Yet they got money to print and give it to what? Everybody except you, meaning everybody outside your borders. The people coming in illegally. The people over there in Ukraine. That's a civic duty on their part. Russia need to pay them reparations, not American people, taxpayers that can barely
preach
together. Right? Iraq, we paying for them still. We paying for what? Afghanistan still. We paying reparations still to Japanese from Hiroshima. We paying recently what just happened, the whole Libya snap. We paying for everybody's situation except each other. And they just showed, I just showed on the Fred here how they printed more money somehow magic when they supposed to stop literally last week, and they printed an extra 54 billion. There was no paperwork mandate, nothing out there on the policy level where the Fed's supposed to print an extra $54 billion.
They said they bought 40 billion back in mortgage, mortgage-backed securities.
That ended last week, QE.
That was in 2020.
No, I'm saying that process of QE, you probably understand it, but I know you're like, I don't know. No, they stopped quantitative easing last week. That means they're supposed to print no more money to pump and hold up the market. They did. Today, they printed more money, 54 billion. Somehow the market went up exorbitantly high on bad news. I leave that alone. Again, I'll be here for another. We'll talk about it next time I go live on YouTube. Again, this is how you check your government and do checks and balance on the government, even catch them lying. So when they get y'all all riled up and y'all feelings and y'all emotion to I'm gonna support people. I ain't telling who you should support or who you shouldn't support, but I'm gonna tell you from a person who followed the money, somebody lying and something ain't adding up. They got all this money to everybody else, but take care of the road, bridges, schools, lunches, reparation. But everybody else got money to get 54 billion, 14 here, 12 here, 6 here. All of a sudden, money gets printed out of thin air. Majority of that stuff going to what? To people who already own assets, wealthy people, right? They benefiting off that. NGOs, et cetera, et cetera. It's the greatest hustle ever. And they just knowing people are what? Sleep at the wheel, uninitiated, strung out on something else, don't know what's going on, and they constantly get robbed every day. They're going in your wallet through your tax dollars. Your kids are going to have to pay for this debt. It's at $30+ trillion right now, and they can't even put together raggedy nickels to even pay off your student loan debt to get you a reset button. They gave companies reset buttons every time with a bailout. Airline industry, banks, fund managers, bad companies, they get a reset button. You don't get a reset button unless you do 100% what? Chapter 7. And that's even crazy because you didn't cause COVID. How you can't get a reset on some of your debt? I'll leave that there. Good night, everybody. Y'all have a good night. I'll see y'all in the next one.
Thanks.
Peace, God, profit, everybody.
Amen.
Stay humble and learn how to get this money. Let's go.
All
Good night.
right, bro.
PPP.
Peace, family. Peace, everybody.